Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me as always Nigel D'Souza and Reema Tendulkar. And what we have is another mixed set of cues. A little bit of caution in global markets, but hey, there's at least one trade deal on the table now.
Indeed, counting down to 9th of July, Vietnam, US done. Yeah. Though we still don't have the trade agreement, the final contours of it, but will India be next?
Well, we've got the social media posts. It starts with that.
Yeah, hopefully you show some love to us, So let's see how that goes. But interesting times. I think by the end of today, we'll be on our own steam because US markets as well will be shut tomorrow. So they have a long weekend. Yeah. And me too. But let's get straight to the action.
That's true. 4th of July, I think Nigel's also going to celebrate in a different way. But let's get to the action then. What we're talking about is what was a slightly mixed close on Wall Street. The Dow didn't participate, but look at the other indices. The S&P 500 finally hitting a fresh all-time intraday high. And you even had the NASDAQ. The NASDAQ didn't quite touch that high, the all-time high, but it did end at a record close, and it's inching towards the all-time high, almost at 20,400. So good day for U.S. equities. Now, the markets were looking at, two different aspects, one positive, one negative. The positive was the fact that there is a trade deal with Vietnam. At least it's a deal. At least it's the promise of some stability, some finality coming to it. So what do we know? That it's going to be 20% tariff. All goods coming in from Vietnam to the U.S. will be tariffed at 20%. But that's not all. There's something called a 40% transshipment tariff that Vietnam would be subject to. What does that mean? That means that if there are goods originating from other countries, but they're being routed through Vietnam, shipped out of Vietnam, then they will be subject to 40% tariff. And that takes care of a lot of the issues and a lot of the, the claims that were being made that a lot of Chinese stuff was being routed through Vietnam and then being exported onto the US. So that's what we have. In exchange, the US is also getting absolute free, no barrier access to the Vietnamese market. So that's one deal done. Let's see whether India is next, which country is next. Now, that was the positive news on the trade deal. The negative or slight negative was on the jobs market front, because yesterday we had the private sector payrolls report, the ADP employment report come through. And there, surprise, surprise, there was a loss of 33,000 jobs versus estimates of a gain of about 100,000. This is the first time the ADP report showed a loss in monthly job additions since March of 2023. So that took the market by surprise. Though people argue that, the accuracy of the ADP report cannot be always verified. The big one is the non-farm payrolls report, the US jobs report, the government report, which comes out today because tomorrow is a US market holiday. Now, on the non-farm payrolls report, we're going with the expectation that in the month of June, over 110,000 jobs would have been added by the US economy. So let's see. This is the big market event that we are watching out for today. In terms of the action in the money markets, yields have been inching slightly higher. We saw that yesterday as well. The US 10-year is now inching to almost 4.28 was the level yesterday. This morning it's cooled off a little bit. That's because the market's also digesting the passage of this big, beautiful bill through the US Congress. And that we know it's going to add over $3 trillion in terms of US deficit. So that was weighing on sentiment. The dollar managed to finally gain. The dollar has been slammed down last many days. But yesterday it managed to gain a little bit versus a lot of global currencies, including the yen, the Swiss franc, the euro, and of course the pound. The dollar index managed to inch back close to the 97 mark in intraday action yesterday. This morning, again, the dollar index has cooled off. Let's pull up the DXY on the screen once again. It's again showing a slight flattening trend, but there was some buying that we saw yesterday. 96.73 this morning on the USD. Oil is not a concern, but it remains a big watch point for us. And yesterday, we had a 3% move in oil prices. Brent is now back towards $69 a barrel. And why did that happen? Because Iran has decided not to cooperate anymore with the UN Atomic Agency, which is the IAEA, in terms of further inspections. Iran basically is saying that, IAEA is always siding with Western interests, so why should we let them come in and inspect our nuclear program? So that led to a bit of a risk premium coming back in oil prices, something to watch. The Nifty, we've been battling with this range, and it's become a bit of a small, tiny resistance. This whole zone of 25,500 to about 25,600 to 650. Now, can the bulls punch through that? We'll have to wait and watch. The action's been very, very stock specific. And the problem with the large caps is that while DII buying might happen, FPI selling is still a phenomenon in the market. And Rima will talk more about that and we'll get to it. But for the time being, it's this range and we need to take it out decisively for the next move up, perhaps.
Okay, but just to get back to the big story which is shaping sentiment today, that's the US-Vietnam trade deal. And the question is, what could be the potential implications for India? For instance, can India become more competitive with Vietnam facing 20 to 40% tariffs? India is still subject to the 10% universal tariff. So even as we negotiate our final deal and iron it out, can we make ourselves more competitive? Secondly, with a full market access to Vietnam, with US enjoying a full market access to Vietnam at 0% tariff, can Vietnam become a more attractive export base for US-bound production, especially for US firms looking to relocate from China? Or will it put pressure on India to liberalize tariffs and market access? Will US, for instance, expect similar concessions from India in the bilateral negotiations which are going about? And just to that point about that ADP data, because it's the private sector data which is captured, it just ties in with the headlines that we're getting. Microsoft, for instance.
Yes.
Microsoft announced that they're laying off 9,000 employees in the latest rounds of cut. This will impact 4% of their workforce. And this is the second big wave of layoffs coming through from Microsoft. Or even Amazon. Amazon said that they're deploying their millionth robo at their facility. So clearly signaling a rise of automation, the rise of AI, which is impacting jobs to some extent. Once again, to revisit the flows number that we had yesterday, the DII's net bought about 3,036 crore in the cash market. The FI's net sold 1,561 crore. What to watch today back home? Well, it's the Nifty weekly options expiry. Q1 updates we'll get to in greater detail, but they're coming through from Avenue Supermarts, M&M Financial, PNB, Indian Bank. There is a block deal in Nykaa, a QIP in Shakti Pumps. Keep your eye out on the April textile stocks after the US-Vietnam deal. And just to remind, US markets not just have the Independence Day holiday tomorrow, today they also have a truncated trading session. So will it impact European trading action? Nigel?
Well, that's right. The top two cues today will be on the global front. The US, well, they have given a pretty okay deal to Vietnam, so that's going to be in focus. What's India going to get? That's the big global cue out there. Jobs report, as you all mentioned, later this evening. And on the domestic front, we have the weekly expiry that plays out that always has some bit of a zing to it. So we'll watch out for volatility in the second half of trade. Moving to the cues. And I'm still not too worried with regard to the Nifty. Yes, trading has been a little bit subdued in the last few trading sessions, but the VIX continues to remain at very depressed levels, and that's normally a bullish indicating. And yesterday, though we had the Nifty that was lower, the VIX as well cooled off. That's one bullish indicator. So that's point number one. Second factor is the FIs are getting confident on the short side. If you look at what they did on, index futures, they added close to on 6,800 contracts or thereabouts. They remain net short with close to on 67% on the short side. And if you're looking at the options data as well, they wrote calls yesterday, and they wrote calls, quite aggressively. But first, let's look at the positioning. In yesterday's trading session, the FI net short positions, well, it went up by close to around 10,000 contracts, while the clients, the net long positions went up by close to around 3 times. So that's how they're positioned right now. FI is net short at 50,000 contracts. Clients are net long. This is the data point that I'm talking about. The FIs not only shorted the index futures, they also went ahead and they wrote calls. Close to around 1 lakh calls were written yesterday. So that sort of a confidence actually is not such a bad thing, because these shorts can get caught on the wrong side, and a market that's devoid of any kind of shorts actually is a bit of an issue, because you're not going to see big kind of inflows in the cash market. Then you're hoping that in the FNO market there are shorts in the system, which is the case right now. The PCR, that as well has come down to the lower end of the range. It's at around 0.78 or thereabouts. At around 0.65, 0.7, that's where we see it base out. And the reason that the PCR has come down is because the call writers are getting very, very confident. Even in yesterday's trade, 25,500 call, 25,450 call. Between them, more than 1 crore shares are added. Which brings us to the levels. The 20 DMA is going to be important. That's at 25,100 or thereabouts. And the recent resistance level now becomes a support. So in terms of levels that we're looking at, that's the important mark. 20 DMA, and this is the recent resistance mark, which now becomes a support. So you don't want this level to break on the downside. For today, the 25,350 should be the level that should hold out, by the end of today. On the upside, the recent high, 25,670, that becomes important. Let's look at, the Nifty Bank. That as well, it's seen some kind of a pullback in the last session or thereabouts, but it continues to defend this 20 DMA, which is, around this mark. So that's going to be important. You want it to defend that mark. The stock that I'm looking at is CPCL. That's Chennai Petro. The stock in yesterday's trading section actually was quite strong, and it's continuing to defend this 20 DMA, which is at around 660 rupees or thereabouts. And, fundamentally as well, things are working for them. Refining margins have moved up. Next couple of quarters will be quite good. And replacement cost actually is, much higher in comparison to the EV that's trading at. And if it's a debt repayment, then that could be an additional trigger. And yesterday, massive delivery-based buying on this counter. I think for the next couple of results, I'll keep an eye out on CPCL, going by the fundamentals and going by the delivery-based buying I'm seeing on this one.
Okay, all right. So Chennai Petro is going to be on our radar. Nigel, thanks for that. Let's get started then with the equity call of the morning. This one's coming in from Vikash Jain of CLSA, who says that with a 2-year EPS CAGR of 11%, Nifty earnings growth is now mediocre. But India has again become the most expensive market in the world on a PE basis, and is at a very rich premium versus emerging markets, Asia ex-Japan and China. Nifty's valuation versus bonds is below the danger mark, and investor sentiment still is in the neutral zone as per CLSA's proprietary India Bull Bear Index, and this may be the silver lining for bulls. CLSA has added Bajaj Auto to its portfolio and removed Britannia. Vikash adds that a combination of extended valuations and risk of earnings downgrades makes them cautious in the market in terms of near-term returns. CLSA prefers the defensives along with autos, energy, realty and banks. Okay, so that's CLSA's call. They remain cautious on the market. But let's revisit that big global story. Trade deals finally seem to be happening. The US president has hinted at reaching a potential trade deal with India as well, claiming that it's going to be a quote-unquote different kind of a deal. This comes amidst hectic negotiations between India and the US, with India's top negotiators extending their stay in Washington. Both sides are at a stalemate right now on the contentious issue of agri as well as dairy products. Here's former RBI Governor Raghuram Rajan on the sticky points that seem to be hindering an agreement, at least right now.
First, there are easy sort of wins. India can buy more natural gas from the United States, which has a surplus of that. It will require sort of positioning Indian purchases. But there's sort of politically difficult places that India doesn't want to go. For example, agriculture, dairy products. Indian dairy farmers, it's a huge source of living, and they don't want to be swamped by cheap U.S. dairy products. So in that sense, there will be some red areas that India will not want to go to, but there are many other areas where I think agreements can be reached. There are other sources of oil nearer India than the United States. But certainly, as far as natural gas goes, LNG is something that India has increasingly used. And as it transitions to cleaner sources of energy, LNG may be the transition sort of energy source. So it is sort of win-win if India buys more of that, and certainly the US has a surplus.
Okay, let's tell our viewers then the interactions we've lined up on the show today. So coming up first at 8:35, Peter Maguire of Trading.com joining in to discuss the recent rally in metals. 9 a.m., we'll be joined by Abneesh Roy of Nuvama Institutional Equities to talk about the likely GST relief for middle class. 9:20 a.m., Vineet Sambre of DSP Mutual Fund will be our market master for the day. 9:30, we'll invite the management of Blue Star to discuss the summer demand trends. A little later, 9:50, Pavan Goyal of Naukri.com and Abhishek Kumar of JM Financial Institutional Securities will join in to talk about the June JobSpeak Index and what to expect from the IT majors this earnings season. At 10:15, Ajay Sahai of Federation of Indian Export Organization, FIEO, and international trade expert Abhijit Das will be joining in to talk about the US tariff deal with Vietnam and the likely implications and impact on Indian exporters.
All right, time to slip into a short break, but we've got a lot of stock-specific action track for you. We get to that in just a bit in our special Top 10 segment. We're looking at Avenue Supermarts, V2 Retail, Indian Bank and CSB Bank. They'll be reacting to positive news flow. And today, the stocks that open in the red, well, they outweigh the number in the green because we have Nykaa, Shakti Pumps, Hindustan Zinc, Mahindra & Mahindra Financial, Vedanta, all of them will react to negative news flow, while actually PNB is the one that could see a mixed reaction to its Q1 numbers. Stay with us. We get into further detail on the other side.
Welcome back. So the cues across Asia have been a little mixed. We had a mixed close on Wall Street as well. But there is a trade deal that's finally been signed. I'm talking about the US-Vietnam deal, at least when there's an in-principle agreement, so to speak. And let's see if that's going to be enough to cheer up the markets. Let's discuss this and more with Hartmut Issel, head of APAC Equity at UBS Global Wealth Management. Hartmut, great to have you with us. Thanks so much for joining in. So let's start right there. You know, originally when those Liberation Day tariffs were announced, Vietnam got a real raw deal, right? They were threatened with over 90% tariff. The reality now seems to be 20%. How do you think the market will take this? And, of course, the deals to come.
The actual number, I think, is more or less what we expected, maybe a touch higher. The transmission side, right? So for these kind of also trading partners, especially what comes via or from China, rather, right, it has probably been a bit higher than we expected. Nonetheless, if we look at markets, whether it's Vietnam, whether it's China, perhaps, right, it doesn't take it too negatively. So, yeah, certainly, I think we're looking forward over the next couple of days that more is coming, because also what we understand from the US, right, they're trying to do it a bit around the 4th of July, which is tomorrow already. So, yeah, I think we're going to see a lot more in the next couple of perhaps even hours, but certainly days.
But Hartmut, just dwell a little bit more on the point about China. How do you think China will react to the 40% tariff on trans-shipped goods? Because this is a direct message to China saying that if you are bypassing our tariffs by rerouting your goods via Vietnam, we're not going to allow it. Pay 40%. How do you think China will react to this?
Yeah, we have to bear in mind, if we account this from China's point of view, right, the transshipments there via Vietnam, we think are close to 1%, so it is not that large. Actually, what you could argue is maybe on a corporate side, right? So some of the companies that go that route, maybe they try to put a bit more production directly into Vietnam so that it, is seen or counted a bit differently. So these are probably the impacts. So none of these impacts is particularly large from a China point of view.
Hartmut, what about India? We were hoping that we get a favorable deal, and, India could be the one that actually gets the sweetest deal. Do you think we still get one? Because the commentary in the last month or so indicates that it could be anyone's guess. What are your expectations?
Yeah. Look, if I look at it certainly from an India standpoint, right, and I think India was certainly here in APEC in the region, right, one of the first, if not the first one, right, that since January basically started the negotiations also much earlier than anybody else. Right? You know, PM Modi was in the US and vice versa, right, JD Vance. So all these things have happened. So one thing is clear, right? Both the Indian side as well as the U.S. side, right? The U.S. also, they need to show progress, right? They cannot just say we have negotiation and nothing happens, right? They need to show that with some countries it is possible to reach these deals even before the 9th of July. So given also that the Indian delegation actually apparently stayed longer in the U.S. than initially was planned, that shows they're onto something. So I would argue from a trade point of view, India is more or less, it's clear that, at least an interim, right? It will not be the final deal, of course. It can never be. It takes a lot longer, but the interim is reached before 9th of July, and that I think is a given. But it's also probably the consensus in the market. So I'm not even sure if that in itself would drive the Nifty, for example, a lot higher. However, we do see the Nifty higher over the next 12 months. We have an attractive rating, but it's for different reasons. It's no longer so much for trade reasons. I think everybody has understood it and has that already to some extent priced in.
Yeah. I'm glad you brought that point up, Hartmut, because I was just getting to that a trade deal with the US obviously is very important for us. But it's not a make or break situation for the economy here or for the market here. And coming to the market, just tell us a little more about where your optimism on India comes in from, because I was just looking at Asian markets across so far this year in the last 6 months. And look at South Korea, look at Hong Kong. I mean, these markets have done so well, 20-25%. We are up only 7% this year. So people talk about earnings concerns, valuation concerns. But what makes you optimistic?
A couple of points. First one for me, is much more important than trade, if you ask me, at least from now on, right? Because trade is well understood and I think is in consensus. So we're looking at the earnings side, right? We need to understand all the way going back to the fiscal year 2024 for India, for Nifty, right? I mean, almost in our numbers anyway, almost 25% growth. It's clear that, the Nifty cannot give you several years of that, right? And we had at the point already forecast that it's going to come in lower. So now for the just closed fiscal year, in our forecast, we have close to 7% probably earnings growth, which is fairly low. So if you're a company, an average company that says, okay, I compare myself with 7% with only, so to speak, 7% before, that's much easier to beat than if I compare myself with a 25% growth base, right? So that is easier, but there's also many sector-specific reasons. Certainly on the financial side, although that's probably a bit more fiscal year 27 focused, but then it's really when it takes off. So as an investor, only sort of 9 months away, but you want to start positioning for that. And then also what comes to my mind is also a sector we like a lot is the consumer side, right? With the pay commission, of course, doesn't decide each and everything. There's other reasons, but of course that also comes inside and it only happens every 5 years. And we have an estimate that over 2 years, it benefits the GDP by an additional just slightly over 1 percentage point. So that's not small, also for the earnings outlook. So all of these things lead us to double-digit earnings growth, we think, for 2 years in a row after we had sort of a mid-single digit. And then why wouldn't I invest in this market?
Oh, wow, that's fantastic. And it's good to get that perspective from the outside. You said that you're expecting the Nifty to rise over the next 12 months. What's the target you have for the index? Or what's the kind of upside you're penciling in?
Look, if I have an earnings estimate that goes up by slightly over 13%, right? And you mentioned before, and I think it's a valid point, right? What about the valuations? We're back to slightly over 20 times now, which is, we have seen a Nifty also higher, right? But it's not particularly cheap, right? I will admit that. But in an environment where the 10-year yields are continuing to come down, we have them below 6% to be precise, 5.8 I think for mid next year. That is always supportive for the valuation side, right? Even if it's not particularly low, but that also helps. But even if we count that out, right? So the 13% alone, we have an estimate of upside for the Nifty of about, give and take 11%, maybe 12, somewhere thereabout. So we could talk about 27,500, somewhere there in that area for over a 12-month base. So I find it difficult to suggest to anybody not to go into it at these current levels.
Thank you very much for that. 11 to 12% upside for the Indian markets the Nifty heading to 27,500 perhaps in the next 12 months. That's the word coming in from Hartmut SL of UBS. Let's drill it down then to the individual stocks you should have on your radar this Thursday morning. Our research team is standing by bright and early with CNBC-TV18's list of top stocks for the day. And first up, it's Vivek on Nykaa.
Well, that's right. Good morning. So, large block deal is expected as far as Nykaa is concerned. As per the term sheet, there are two sellers, Harinder Pal Singh Banga along with Indira Banga, are looking to sell a little over 2% stake in the company. The floor price for this particular block deal is at a discount to yesterday's closing, and it's at 200 rupees a share. Total size of the block is 1,200 crores. So watch out for Nykaa. Could see a red opening as far as today's trading is concerned.
Okay, all right. Thanks a lot for that, Vivek. Well, let's go across to Hormuz. He's here. He's tracking Shakti Pumps. Hey, Hormuz.
Morning, Nigel. And Shakti Pumps has launched yet another QIP to raise funds. This comes almost a year and a quarter after they did their previous exercise. So this time around, the floor price of around 966 rupees is almost a 2.5% premium compared to yesterday's closing price. So keep an eye out on that. Of course, the board has mentioned that they'll offer a discount of up to 5% on the floor price as per their discretion. And they had approved raising around about 400 crore rupees through this QIP route in January of this year. So now they're exercising that mandate. And the last time they had done a QIP was back in March of 2024. And they raised 200 crores through that. Most of those shares were issued to funds belonging to LIC and SBI. And since that last QIP, the stock is up almost 300%. So expect the stock to open in the red, but may see some recovery over the course of the day.
Okay, all right. So Shakti Pumps on our radar. Thank you very much for that, Hormuz. Let's talk about Avenue Supermarts, V2 Retail. A lot of companies coming up with their mid-quarter updates. Mangalam, how's it looking?
Well, for Avenue Supermarts, the standalone revenue for the company grew by 16.2%. They added 9 stores during this quarter. And if you look at last year and now, the store addition has actually been 14.3%, which implies that, the same-store sales growth could be low single digits, around 1.5% to 2%, which is not the best. But then again, the sentiment has been such with the competition for quick commerce, etc., and the stock which was slightly under pressure yesterday. I would like to, believe that there would be mild green on DMart today, because the street will now await numbers coming in from the company in which they will watch out for the product mix. They will watch out for how DMart Ready, the consolidated business, has performed. And at the same time, pace of store expansion is something that the street is betting on for DMart. On the other hand, V2 Retail, very strong update coming in, 51% jump in the revenue for the company, and this is on a high base already. The same-store sales growth, however, is just 5%, and the situation is similar to what happened with V-Mart Retail yesterday. For V2 Retail, if you adjust for the Eid shifting, the same-store sales growth is at around 10%, so see some green on V2 Retail.
All right, Mangalam, I think I'll do some ground research. I'm going to be in UP by this evening for the next 3 days or so. I'll come back and give you some feedback in terms of
Bag with shopping bags.
Yeah, I mean, some kind of bags. But yeah, I'll do some checks out there, because the malls out there, they really have a lot of footfalls out there, much more than actually Bombay as well. Thanks, Mangalam, for that. But now it's time to welcome Gaurav, who's the new member of our team. And watch out for this guy, making a debut today. And solid one. Gaurav, tracking banks and financials today, PNB and Indian Bank on your radar. Tell us more, please.
Well, yes, Punjab National Bank. First, let's talk about this bank, because when we look at the system growth, we've already seen some slowdown in the banking system. The growth is at around 9.6%. And when we look at Punjab National Bank, it seems that the bank is also following the same trend, because advances grew only by 9.7%. It was actually a little bit lower than their own estimates for FY26. On the other hand, when we talk about deposit, we saw a strong growth of around 12%. But let's not forget that the CD ratio for the bank is at around 71%. So definitely bank needs to focus on the growth on loans from the time going ahead. Other than that, Indian Bank actually came up with good set of numbers, because when we look at the advances there, we saw a growth of around 11%. That was largely led by RAM segment, which grew at around 15% on a year-on-year basis. On the deposits front also, we saw a good set of number in line with what the bank had estimated for FY26. So definitely good set of number is what we saw from Indian Bank in the quarterly updates for this quarter.
All right, Gaurav, but we can't let you go only at that. We'll come to you for a few more stocks and maybe a treat later in the day. For the time being, I'll take over. We'll talk about Hindustan Zinc and then come back to you. They came up with a quarterly update. It's not a big mover of the stock at all, but the number looks a little bit subdued. So the mined metal production, that's mildly higher by close to around 1%. But if you look at the saleable metal production, that's down by 5%. Refined zinc production as well down by close to around 4%. And refined lead production as well is a little bit lower. In addition to that, silver, which is where the big bet is on, right? Because silver prices have perked up. In number of tons, it's come down to around 149 tons, which is down both on a year-on-year as well as on a sequential basis. So, one of the factors that could contribute to the stock going down. But remember, in the last 1 month or so, from the time we highlighted that 520, there's that temptation that someone will come and sell, either the government or the promoter. And that's what happened. The stock has already corrected from 530 all the way to this 450 level. But as promised, Gaurav, you're on the list today, you're on the watch list with few more stocks. Tell us.
Well, yes, first let's talk about Mahindra and Mahindra Finance. A very weak set of numbers is what we saw in terms of disbursements for Q1 FY26 because disbursements increased only by 1% on a year-on-year basis. Now, let's not forget in the same quarter last year, the disbursement growth was at around 5% and it is also lower than what the street was expecting. On the other hand, when we talk about collection efficiency, there we saw a little bit of deterioration. And in fact, when we look at the street's expectation now, they are also a little concerned about the growth because now analysts believe that the loan growth could be somewhere around 12% if the same story continues in the quarters coming ahead as well. On the other hand, when we talk about CSB Bank, a strong set of numbers is what we saw in this quarter as well. A loan book growth was at around 33% on a year-on-year basis, and this was led by the gold loan portfolio that the bank has. When we talk about deposits, there also we saw a strong set of number in the tune of around 20%. So definitely good set of number from CSB Bank. But on the other hand, M&M Finance is coming up with weak set of numbers for Q1 FY26 so far.
Okay, all right. Thanks for that, Gaurav. Well, I'm looking at Vedanta. And yesterday, the stock was excited. In the last few trading sessions as well, it was excited because all eyes were on the NCLT hearing. We don't have a verdict coming out of there, and there are, various technical factors that are still out play with regard to the regulators. So we'll have to wait for the outcome from the NCLT. For the time being, the next hearing is on August 20th. So that NCLT trigger didn't really play out the way the street anticipated. So that's why, because of the delay, we're working with a bit of a red today on the stock. The management, though, says they're committed to enhancing shareholders' value and they believe that this will ultimately get through. So management is confident that things will, move ahead in the right direction. Why are we saying, the stock opens up in the red? Because there'll be a delay to the timeline. Earlier, they were saying by September 2025, we'll have this demerger totally completed, which currently will not be the case. So from Q2, it becomes a story of Q3 FY26. However, the stock after opening up in the red could see some buying. Why is that? Because this demerger actually gives a big value unlocking proposition. The stock trades at less than 5 times EV upon EBITDA. And when you do the sum of parts, in fact, it can unlock value. Second factor is, the valuations, as I mentioned. And the third factor is the dollar index is weak. When the dollar index is weak, it's good for base metals. And Vedanta is the play on all of those base metals. So stock opens up in the red because of the delay in the demerger timeline. But some kind of bottom fishing could be seen at lower levels.
Okay, all right. So Vedanta is going to be on our radar. But yes, it's not a full green signal from the NCLT just yet. Let's quickly recap then our list of top stocks to watch. The ones that have positive news flow this morning are Avenue Supermarts, V2 Retail, Indian Bank and CSB Bank. Stocks with negative news flow would be Nykaa, Shakti Pumps, Hindustan Zinc, M&M Financial and Vedanta. PNB, we're keeping it on the yellow side. Perhaps a mixed reaction expected to the Q1 update.
Okay, let's also track Tata Power. Why is that? Vivek is joining in with the details. Vivek?
Well, that's right. An interesting update to the exchanges late last evening. So, what's actually happened is that there was an arbitration going on between the company and its Russian mining partner. And yesterday, the Singapore International Arbitration Center has ruled against the company. And in fact, they've asked Tata Power to pay close to $490 million in damages to his Russian partner, which is Kleros Capital Partners. Now, the payment has to be made along with interest as well as other legal costs that were borne by the partner. Now, what does Tata Power say? Tata Power says that it is in process of reviewing contents of this particular award and is evaluating all options, including maybe looking to challenge this particular award that has happened at Singapore. Now, what is this particular case all about? The case regards to a Russian mining partner where, remember, Tata Power and the Russian partner actually had a JV where they were looking to explore mining as far as Russia is concerned. And the main case revolves, given the fact that Kleros alleges that Tata Power breached confidentiality as well as non-circumvent clauses in the NDAs. So overall, watch out for a knee-jerk reaction as far as Tata Power is concerned in today's trading session.
Thank you very much for that. And let's round up all the action from the commodity and the currency space. Manisha Gupta joins in as always. Manisha, it's crude, which has risen overnight.
Oh, well, absolutely. 3.5% of gains coming in for crude oil prices, heating oil, even natural gas prices gained up by 2%. In the Asian markets right now, there's a bit of a profit-taking coming in, and that is because there are mixed cues. But the support definitely is from the fact that Iran is now suspended cooperation with the United Nations. Iran says that they are enacting laws that the future inspection of nuclear sites by the IAEA will need approval from Tehran's Supreme National Security Council. So clearly, that is what is adding premium back to the prices here. But markets also are looking at surprise buildup in the U.S. crude inventory. The demand doesn't seem so strong. That is what is capping gains in Asia right now. The U.S.-Vietnam strike trade deal agreement could add some positivity to many of these industrial commodities as we see more trade agreements come through. But what is going to be in focus today is going to be the U.S. jobs data. Further cues would come in from that. And it's not just the crude oil prices. Almost everything across precious metals and base metals seems to be doing well. Gold gained up by 1% overnight. Platinum, palladium gained between 4 to 5%. Iron ore and steel are up by 2.5% overnight as well. And then you have 3-month highs continuing in case of copper, zinc as well. So good going across commodities in Asia yet again.
All right. Thanks a lot for that, Manisha. Well, for the time being, we'll slip into a short break, but we'll take that discussion forward on commodities. Peter will be joining in on the other side to decode the recent rally we have seen in metals. Later on, Prakash Diwan as well will be joining us to help us out with some fundamental stock talk. Welcome back. It's a Thursday morning. Hope you're having a good start to the day. Well, we'll talk all things commodities, and to help us out with that, we have Peter McGuire, CEO at Trading.com, who joins us. Hi, Peter. Good to see you this morning. Commodities seem to be perking up a little bit. Tell us, how are you feeling about the space? You know, there is this hope that China is going to stimulate its economy. However, if I look at the recent prints that are coming out, actually June is showing some kind of indication of an improvement in comparison to May. What are you working with in terms of a stimulus coming out of China?
Well, good morning, Nigel. I think, there's no doubt the second half we're going to expect to see significant firepower coming from China. We understand where it is from a stock market perspective and from property and the property overhang. The other side, of course, has got to be internal demand. We understand that we're fairly along the road. I don't know what the deal smells like or sounds like or looks like as far as tariffs with the US, but there seems to be, from President Trump's words, that they're making some significant headway. So that should be a fairly good sign for second half of the year. I'm looking forward to seeing Q3 bid up as far as industrial metals. And as you mentioned, the overall theme moving forward, the likes of platinum is up 40% in the last 8 weeks. So the market's certainly on fire.
That's right. Platinum overnight as well, I think, was up more than 5% or thereabouts. What about steel prices first? Let's address that. There was a news report yesterday that suggested that a couple of provinces in China are going to be told, you cut down production because that's what will support pricing. The pricing in China has been very, very weak. If I plot a last 18-month trajectory, pricing has corrected from what? $690 per ton to sub $500 per ton. Do you think bulk of the bad news is in the price? And as these sort of prices, well, they'll be forced to reduce production, which in turn will support steel pricing. Are you in that camp?
Yeah, I am in a lot of ways, as you highlighted, down, the best part of 30% in that window of time. So naturally, the only way to get prices up would be restrict production, and in turn, that might add to, a rising tide lifts all boats. So I'm thinking as industrial metals gain some traction, copper's over 10,000 a metric ton now, all of these metals could see a nice bump to the upside over Q3. So that's the general theme. Also, that sell-off as far as US dollar can't be discounted.
Yeah, that's working well for base metals, actually, the kind of weakness that we're seeing in the US dollar. But give us a couple of levels. Do you think that, global steel prices, give and take everything, demand, tariffs, China stimulus, would you be leaning to an uptrend from here on Chinese steel prices, which in fact, is a trend setter for the rest of the globe? Should we expect steel prices in China to move up, say, by 5 to 10% in the next 6 months?
Well, I think so. I think they'll nudge up because I think that 30% sell-off that you've seen is really going to say, it's bottomed out. There it gets a point in time, like all commodities, they get oversold and overbought, and possibly they're quite simply oversold at the moment. So I wouldn't be surprised to see a bump up. Let's see what happens naturally, the likes of some of those industrial metals as well. And the overall consumption, I think, you've only got to go to a city like Mumbai and see the steel production and steel consumption. So the world is certainly building and it requires steel, Nigel.
Yeah, indeed. And from an India market perspective, we used to do 110, 120 million tons 2-3 years ago, and now we're doing more than 150 million tons. At a similar time, the global steel production has not gone up, neither has demand moved up, and we know on a per capita consumption of steel, we're much lower than the global averages. So India clearly is standing out, and the centre as well has done well to protect us from imports. Got that. So that's out of the way. Let's talk about gold, because no conversation is complete without gold. It's holding around the $3,300 per ounce. Where do you see that one headed? Is the bias to the upside, or you wouldn't rule out, say, a 10% pullback from here?
I think the bias is to the upside, a couple of things, because one, you've had that big sell-off as far as US dollar. You can't discount it. Secondly, the overall demand from central bank purchasing and, of course, retail land. The next part is, and from a store of wealth, the next part is interest rates and the Fed, what's happening if we get that non-farm payroll tonight and it's better than expected. I think that'll really put pressure on Fed Chair Powell as the tariffs come into play on the 9th of July. All of these factors, I think, is going to push gold higher. So I think the second half is going to be more dynamic than the first half. That's a big call, but I still believe that end of Q4 will be higher than where it is at the moment.
Peter, hi. Great listening into you, your call on all the metals out there. I just want to round it off with oil, because overnight we had this development of the Iranians saying that they don't want IAEA to come in and inspect, given what's happened. And then we're moving towards this meeting as well, right? OPEC, or is it OPEC Plus, the meeting that's happening a couple of days down the line. So for the oil markets, what are you watching, and what's the kind of immediate range?
Well, I think where it is, good morning, Surabhi. A couple of things. First off, you've seen it be pretty well, range bound. All the geopolitical noise and excitement has been drained out of the market. So I think it's going to hold these sort of levels. That's 64 for NYMEX, up to say 67, 68. I think it'll range trade unless you see something dramatic happen. There's talk as far as Iran. Well, this is, it's geopolitical talk. It's going to be very fascinating how this all develops, and it's only early in the storyline. So it doesn't surprise me, and I don't think it surprises many pundits at all. So we've just got to see what goes on over the rest of this month. But I think OPEC are going to significantly improve or increase their production, and there's going to be no shortage of oil.
Okay, so you're expecting, say, if we talk about Brent, you're expecting it to range between what? I mean, 65, 60, 65, what's the range?
Mid-60s up to possibly a 69, 70 handle. But I think if they increase the production, I feel as though you're going to see, again, softness come across that crude complex. And that's, I think, the overall theme moving forward into Q3. I still believe there'll be a glut in the market by end of Q3, early Q4.
Okay, got it. So mid-60s to 70. I think we'll take that. We can handle that. Anything more than that is a problem for us here in India. But that's good to know. Thank you so much, Peter. You have a great rest of the day, and we look forward to connecting again soon. Thank you.
Thank you.
All right, with that, let's shift the focus to a lot of the fundamental stock ideas for the day, a lot of the analysis that we have to do, the top 10 list that we were just talking about. Prakash Diwan is with us. Prakash, I have, first of all, a disclosure and admission. I spent only 2 days in Goa, and I couldn't help feel envious thinking about you through and through. So I wish it was longer. Maybe next time, maybe we'll catch up. But yes. Coming back to, some of the updates that are coming in, lots of the financial updates have been coming through. Indian Bank seems to have done well. But for M&M Finance, those disbursement numbers are still in single digits. I don't know if you had a chance to see any of the financial updates. Any thoughts?
Thank you, Surabhi. And thank you for the lovely compliments for Goa.
Kept thinking of you, yes.
Thank you. So, I think the financials have started not so much on a very, promising note as yet. I mean, it's too early days. It's just the first of the month, second of the month, and you'll start seeing things come up. And of course, you'll have to wait for the meatier part of the market to kind of report, share the updates. But my sense is that this is a quarter where things are going to likely to start changing. The gears will start shifting. The results will probably happen in the September quarter. Nothing much has happened in June. And more importantly, it's the ability of these larger financial services businesses, especially the lenders, to be able to grow credit at a pace where, it starts impacting the margins positively. Now, if you can take advantage of growth opportunities in the market, and surprisingly, a lot of the PSUs have also done very well, apparently, as far as what I can make out when I talk to a lot of banks and all, at the ground level is concerned. So there will be improvement, which will be all across, but not very significant. So what happens is the bar is raised, but it will not make things so dramatic for the sector to kind of start getting those kind of valuations yet. But towards September is where things could probably look up, provided nothing else happens, nothing untoward happens during the next 2 months for the markets to kind of go negative. But I would expect the smaller banks will probably do very well as we start getting the updates from most of them.
All right. Hi, Prakash. Good morning. And good to see you as always. Goa, that's on my mind. I'm wondering which month I can make it there. But anyway, for the timing, I'm headed north over the weekend. Goa is something, but before the end of this year, and hopefully we'll have a drink out there. That said, let's talk about Vedanta. Yesterday people were tanking up in the last few days. There was a fair bit of delivery base buying on hope that the NCLT will get a green signal, give them a green signal for that demerger. I think there was a change in the bench as well, various other reasons why the demerger didn't get a green signal yesterday. But now it gets pushed by another 50 days for the next hearing, which is on August 20th. What is your view on the stock? In all probability, it starts off in the red today. As we have discussed in the past, there is value out there. Valuations are in favor. And the promoter as well appears that, they want to do the right things from here on. Deleveraging the parent, that's Vedanta Resources, giving a higher amount of dividend as well. And hopefully there is no big capex that is announced. Would you be a buyer on the dip, or would you wait for a sharper correction, say towards 400, 420?
So, good morning, Nigel. So, I don't think Vedanta is going to see very sharp correction unless, again, there is something in terms of, some news flow that upsets the commodity complex. But what this does is it gives another opportunity to investors. If today's dip is because of the delay or the, push out of the decision, it's going to be an opportunity for people who have not bought into it earlier. Simple. The math is absolutely in favor of buying pre-merger, because what you end up getting after the demerger is actually far more valuable, very clearly, whichever way you cut the math. it's going to be favorable. So it is important that people understand it's a question. It's a waiting game. Okay, it's not as in if it's about Vedanta finally getting to do things in a sequence which will probably be a bit longish. So if you are holding on for the next 12, 18, 24 months, there's enough value that's going to get unlocked. So it's a play which you can use very smartly with stocks and with some call options and all of those. I know people are very smart at all of these. I don't need to tell them that, but that's where you kind of sit in this. I don't expect sharp corrections. If you're waiting for that, you should keep accumulating. Look at accumulation. That of course it also has to be fitting into your risk reward profile as per overall portfolio sits.
Prakash, how should investors, retail, go about thinking about this US-Vietnam deal and the implications for India, say particularly the exporters in textile, for instance? What would your thoughts be?
Good morning, everyone. So I think this is definitely going to put some sort of a pressure on the India side, just because Vietnam competes with us very directly in some of the elements, and textile is probably garments particularly is primarily one of the biggest. It does end up putting pressure because if we don't do that, there's always an alternative source. The advantage that we have is the textile setup also has a lot of complexity, especially technical textiles, garments made out of a particular range of fabrics and price points is not something which Vietnam is very good at. So you'll only be left with that niche. So I think it does put pressure. I don't know how it pans out in terms of the overall deal that's likely to be announced. But you'll have to wait for it. There's nothing very attractive because of the deal today that you would want to buy. But my sense is that it's just that most of the markets in Southeast Asia have done very well in the last month and a half. We haven't done it primarily because of the lid that's been put on this FTA or DTA, which we are looking at. So this only accelerates the process, is my sense. It may not necessarily change the outcome, but it just changes the direction to the outcome.
Okay, all right. Stay with us, Prakash. We have a few more questions for you for the time being. Slip into a break, come back. Prakash still with us. He'll help us out with some fundamentals. And Sudarshan and Mitesh will join in to help us out with the technicals.
Welcome back. Yesterday, markets opened flat but inched lower and finally closed with a cut of about 90 points on the Nifty around the 25,450 mark. This morning, the GIFT Nifty is suggesting a mildly positive start. Sudarshan Sukhani and Mitesh Thakkar, as always, join in to help us with the technical setup on the markets and how you should approach trade. Gentlemen, good morning. Sudarshan, let me start with you. Your thoughts on the opening and the way to go about trade on the index?
Yeah, good morning. Well, we've had 3 days of consolidation and a minor dip, and the idea was look for a 200-point dip. That has also come about. we will still be in a consolidation in the sense it will be a trading range. I don't think the Nifty is ready for a very big up move, but today is a different day. I would be a buyer today. The consolidation and the minor dip could give us a decent tradable bounce. So buy the Nifty, keep a tight stop just below 25,350, and then see where we go ahead. But I would be a buyer.
Okay, look at the North America Class A truck orders. There is a decline on a month-on-month basis, 8,900 versus 12,000 in the prior month. So that's a 25% decline month-on-month. And on a year-on-year basis, it's a fall of close to about 36%. So Bharat Forge should be on your radar this morning. So Mitesh is buying, Sudarshan is buying the markets today, at least at the index level. Mitesh, what would your approach be?
Good morning. So, I think broadly the markets have been in some kind of a move, and last few days we have talked about the fact that we are overbought, we are hitting a supply pivot, and therefore some pullback can happen. I think 25,400 was my first target. That's been met, and in the worst case, I'm looking at 25,200. But for the time being, assuming that 25,400 holds, and there's a good chance of that, then I think longs can be taken here. Keep a stop below 25,340, 330 zones, and on the upside, as you get closer to 25,650, 700, which is the falling gap area which we did last year in about September, October, I think that's where you would want to take profits on your trading positions.
Okay, all right. Good morning, gentlemen. Mitesh, you go first. Tell us what's your stocks on your radar, and if you have a view on CPCL, that's Chennai Petro, where highlighted that there was big delivery-based buying, and it continues to defend the 20-day MA. If you have looked at the chart of that one.
So I'll take Chennai Petro first, Nigel. I think, the stock has been doing a good consolidation in the last about 12 to 15 sessions between 710 to about 670. And the overall setup is quite positive. So I think once we start getting past 710, 715, I think the stock should signal next leg of an up move and possibly head towards levels of around 795 to 800. So very positive over there. I think wait for a breakout about 7, 10, 15, and then take a 25-point kind of a stop loss. Look for another 80, 90 points on the upside. Coming to my stock recommendations, I have Steel Authority. In fact, the entire metal pack on the ferrous side is looking very interesting. I've chosen SAIL as a trading pick. So buy here with a stop at 134. Look for targets of 146. A buy on GMR Airport with a stop below 87 for targets of 92. IGL is a buy with a stop at 215 for targets of 230. And a buy on Apollo Hospitals. Keep a stop below 73.65. Look for targets of 76.50.
Okay, all right, got it, Mitesh. Thank you very much for all of those trading ideas. Let's come to Sudarshan as well. Morning, Sudarshan. What's your stock list looking like today?
Well, it's an all-buy list like the last few days. The trend is still up. Canfin Home is a buy with a stop under 795. Polo Tires is a buying opportunity, the stop under 458, and in the same sector, roughly the same sector, Balkrishna Industries is a buy, the stop under 2500. And finally, my last and fourth call is Deepak Nitrates, again a buying opportunity with a stop under 1950. There is something going on in mid caps, and you should focus on that.
Okay, something going on in mid-caps. Got it. Thank you very much, gentlemen, for the trading calls. We'll come back to you a little closer to market opening. For the time being, we'll take a break. On the other side, of course, we'll have the pre-opening rates. And also, we'll be in conversation with Abneesh Roy of Nuvama Institutional Equities. We'll talk about the consumer sector. There's a lot of interest suddenly. Are there any interesting stocks where growth and valuations could find a good match? We'll discuss it when we come back. Welcome back. 2 minutes to go and we'll have our pre-open rates very, very soon. Let's discuss some more stocks with Prakash in the meantime. Prakash, consumer, I mean, we're going to get into a full-blown discussion anyway, but looking at the updates that have come in, Mangalam's been telling us Avenue Supermart and a couple of the others. V2 retail was good. Vishal was pretty decent as well. So would you look at picking up anything over here? Because the market's hope is that this is the pocket which hasn't worked for years now. And maybe there's a revival. At least the stocks haven't rallied. At least you're not buying at, all-time highs all the time. Your thoughts, maybe on Avenue or any other consumer stock?
No, absolutely. So if you recall when we saw the numbers come through for some of these other names, and remember the market has grown in terms of the number of listed plays that are available. Earlier, it used to be just a battle between Avenue and a Trend or something like that. Now you have so many newer options coming up. And all these options tell you that the leadership still rests with either Jio or with DMart, depending on what you seek out of these plays. Jio, of course, is looking at restructuring itself, getting ready for a potential float and all of that. But we don't know the timelines, and you can't participate in that except for buying the Reliance parent share. But DMart happens to be the only option that you have to actually make a proxy out of this entire sector or whatever. Now, if FMCG companies start sounding positive, and which they could possibly in this current quarter, given the monsoon has been timely and widespread, or blah, 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 you will probably see the retail segment also grow. And DMart has done what they've done smartly is they've started adding newer stores in potentially very promising pockets. And my sense is that they've done so much of internal efficiency exercises that you'll probably start seeing all of that expansion get them operating leverage far better than a V-Mart or a Vishal Megamart or whatever. So I would believe that if I had to allocate some money, it would only be to Avenue. But the valuations are still formidable. So you'd wait for a market softness in the market to give you that opportunity. But DMart definitely, as I mentioned last time, it's not about retail. They actually understand that business far better than anybody to be able to carve out that 10 basis point on every step of the value chain. And if that continues, you'll probably have a very, very formidable kind of an option to look at. But the valuations are a bit of a stretch for me, so I would wait for some softness.
I think someone told me the store addition for Avenue Supermart in 9 stores this quarter is the highest in the last 3 years. So I think as same-store sales growth, Mangalam was saying, is perhaps moderated because of the switch towards quick commerce, store addition has been very strong for Avenue Supermarts. And the top line growth is about 16%, slightly lower than the 17-18% seen in the prior 2 quarters. Prakash, share your thoughts on, we spoke about Nykaa, but what about some of the banking updates that have come through? So whether it's PNB, Indian Bank, Catholic Syrian Bank, any key takeaway?
Yeah, so, of course, it's too early, as I said earlier, that you will see a lot of more updates which will give you some sort of a trend. But if you ask me, I'm anticipating, I've not seen numbers yet, but I'm anticipating far better numbers from the smaller banks. Look at Indian Bank, for example. I mean, compare it with PNB. PNB is much bigger, Indian Bank is smaller, but at least there is very clear this thing about improvement. And when that happens, see, this is the base level formation, Rima. You will probably see credit quality improve. And of course, the softness in pricing itself helps them increase margins as they improve credit growth. The smaller banks have a higher delta in that because they've always got compressed NIMs, and this kind of takes that away. But CSB, Indian Bank, these are numbers that are far more encouraging. And I would allocate some money to smaller banks this time around because it's the overall sector that's going to grow in the September quarter. And when that happens, you have far better delta that comes through rather than a SBI and an ICICI and an HDB. See, all of those banks will grow as well. I'm not taking that away. But what I'm talking about is that the delta is far more significant here. So you'll generate some alpha. And there you have. This is a sector to allocate more money this quarter into, but the smaller banks will probably be leading the charge in terms of outshining the other ones.
Okay. All right, Prakash, thanks a lot for joining in and filling us in with all of those details. By the way, If you have to look at some of these names that in pre-open are giving you a bit of an uptake, we had look at the top line growth of V-Mart, case in point. That's in mid-teens, at around 13% from the quarterly update. V2 retail actually was up closer to around 51%. So that in fact is showing a sharper uptake. I think it's up closer to around 5% just in pre-open. I think that's the circle limit as well. And Bazaar style retail, that's a smaller one as well in there. That growth in revenue terms was up 37%. So that's another smaller one out there. That as well has perked up a little bit, 2.5% higher on that one, Surabhi.
Okay, absolutely. And by the way, since we're checking all the important news-based stocks in pre-open, should also put Vedanta on the table. Vedanta, I mean, at least in the pre-open, there's not much of a big reaction. It's down about 0.5%. Because the company has reiterated that they're very firmly standing behind this four-way demerger. They just think it's it's just a bit of a delay at the court to get the approvals in. But they think that this is the way to create shareholder value, and they're quite confident of pushing it through. So that's Vedanta, down just about ₹1 at this point. But as promised, let's get back to that conversation on the FMCG and consumer space. We have Abneesh Roy joining in, Executive Director at Nuvama Institutional Equities. Abneesh, thanks so much for being with us. Everyone's looking out for these FMCG and other consumer/retailing companies, hoping that there'll be that burst of growth where finally the market attention can get back, especially on staples. What are you working with? Let's get your sort of broad brush expectations, consumer expectations for Q1.
Sure. Thanks and good morning to everyone. So yes, we are seeing the macro improving. If you see, most of the parameters which are needed for a consumption boost are coming into place. Yesterday, there was a talk about GST rejig also, and they're talking about 40 to 50,000 crore kind of a consumption boost. This is over and above the 1 lakh crore tax rebate which happened in the union budget. Monsoon is good, palm oil in control, crude oil in control. So a lot of the macro, we are seeing improvement. In Q1, you will see still a slight lag in terms of recovery in consumption is there. Our sense is from Q2, you will see the initial signs. Some companies are already seeing some level of improvement. For example, in Hindustan Unilever, which I think is the barometer of the sector, we expect 3% plus kind of volume growth in Q1 versus 2% previously. Avenue Supermart update was decent with a 16% sales growth. They are adding now UP as a new market. That's obviously India's largest population. For next 3-5 years, I expect Avenue Supermart store addition to be strong. In this quarter, you will see the summer category being quite weak. So Varun Beverages, Imami will be weak number. We are also slightly underweight on Maharashtra liquor spirits market because of this new development. So you will see that overall starting Q2, United Spirits numbers will be weak. Even in Q1, slightly weakish numbers from United Spirits. So in the alcohol, we'll have a clear preference for United Breweries as the stock. They will see beer consumption go up in Maharashtra. In the core staples in Q1, we expect good numbers from Britannia, almost high single-digit sales growth and margin expansion because palm oil has corrected. We also like Bikaji. We like Nestle. Yesterday, they have opened more expansion for the Maggi, which shows the coming back.
Okay, very quickly, since of course you've mentioned lots of companies, if I were to once again ask you, top 2 or top 3 companies that are likely to showcase the highest volume growth in this quarter, which ones would they be? Top volume growth drivers?
Yeah, absolutely. So Marico update will come anytime. We expect 7% volume growth for the India business. Bikaji will be 8% volume growth. These two, if I have to highlight, Bazaar also quite positive. We expect almost 6-7% volume growth. In our view, paint stocks bottoming out is there. Gradual recovery will start. Consolidation has happened. Axo has gone away, and now JSW is there. So we are positive on the paint sector from a longer term. But Bazaar and Indigo, there is a revival in Q1 itself.
All right. Hi, Abneesh. Thanks a lot for joining in. You briefly mentioned HUL, the 3% growth, I think is what you mentioned. A lot of investors say this, that everyone says buy high pedigree names, good quality, good products, etc. So some of them would have bought HUL 5 years ago. To their bad luck, the Nifty is compounding at more than mid-teens in the last 5 years, but their stock price is the same. Do you think the time has come now for HUL to perform? Because we have seen this in the past. I think in that period from 2008 to 2018, it didn't do much. And then the stock went up 3 times or more than that. Do you think the time has come now that HUL deserves to be a buy?
I think very good question. In many large caps, we did see in other sectors 4-5 years nothing happened and suddenly stocks have gone up. I think in case of FMCG, HUL will be still slightly lower in pecking order. Yes, stocks should revive because ultimately for any FMCG, volume growth is very important. And Marico stock, if you see 7% kind of volume growth has really supported the stock. So yeah, I like Hindustan Unilever. My preference in terms of pecking order, we like Britannia more, we like Nestle more, because food categories will grow faster. In case of HUL, the issue of Horlicks continues to remain as a challenge in terms of growth. And in terms of D2C competition, Minimalist is a good acquisition. Near term, the issue for HUL will be the lower margins which they are already guided. I think Q2, there is a surprise positively possible because palm oil, there is a correction. And coffee costs have also come down by 30% in the last 1 month. But in terms of preference, HUL will be lower in the pecking order. But yeah, I think from the next 6 to 12 months, it could give a 10 to 15% return.
Got that. Just to get back to the point about GST and the likely relief for middle and lower income. So they would target items like toothpaste, tooth powder, umbrella, sewing machine, pressure cookers, kitchen utensils, bicycles, etc. So do you want to tell us 2-3 stocks which would, directly benefit if this were to come through? We should keep on our radar.
I think in the listed FMCG space, not much. Toothpaste is at 18% rate, so it's not at 12%. At 12%, we have very limited niche products in FMCG. So I don't think the listed space any direct plays there. So we are talking about ghee, we are talking about, say, drinking coconut water, etc. Those are very small segment. The real boost will be in terms of customers saving on those because he will pay lesser. And there can be 40,000 crore kind of stimulus program, but very early days. We need a consensus in the GST. But again, if you see, this is in sync with what government has done. They have reduced the import duty on edible oil a few weeks back. They have given 1 lakh crore kind of stimulus in terms of tax rebate. So clearly, government is looking for a lower inflation and more stimulus because urban demand continues to remain quite challenging in terms of the lower end. So I think they will address.
So, Abneesh, what you're saying is, and I know, we don't want to speculate and guess too much on this right now. It's within the realm of the policy. But you're saying that from the listed FMCG universe, you're not expecting the slab changes or the rate rationalization to be too material for listed FMCG companies. Is it right?
That's one scenario. For example, if 12% moves to 5%, no big direct benefit, small here and there can happen. As I mentioned, ghee and some of the other segments are at 12%. Tooth powder is at 12%. So but that's very small part of the listed oral care companies. Toothpaste is the big segment, which is at 18%. So yes, the other scenarios could be they do a complete rejig, right? If they do, for example, instead of a 5%, 18%, 26%, they have a different rate, then we'll have to see. But as of now, the more likelihood is that 12% merges into...
Moves to 5%.
Got that. Thank you. Thank you very much, Abneesh, for your providing that clarity. 9:10, Sudarshan is back with us. What would your calls be?
Well, Canfin Home is a buy with a stop under 795.
Okay. Mitesh?
I'll go with a buy on Steel Authority for targets of 146.
Thank you. Let's talk about the US-India trade talks now. Government sources say that an interim trade deal could be signed with the US within the next 2 days. Abhimanyu joins in with the details that he's picked up.
Well, intense negotiations are underway in Washington, D.C., where India's chief negotiator, Rajesh Agrawal, has gone along with the entire trade negotiation team, and several issues, several tariff lines are being discussed. Of course, government sources have also communicated that none of India's interests would be compromised, particularly in the dairy and agriculture sector. And also, it has been indicated by sources so far that the entire sectors of dairy and agriculture cannot be opened. However, some piecemeal relaxations may be given to niche products, premium products, which are often imported into India from the United States, which may involve pecan nuts or even Washington apples and walnuts for that matter. It remains to be seen how early the negotiations are going to conclude, even as the 9th July deadline for the end of the stay on reciprocal tariffs is fast approaching. So, of course, both the sides are keen to seal a deal. However, there is no desperation per se. That was the word which had initially been communicated from government sources. Now, negotiations are continuing between both the sides, and also the US is negotiating with several other geographies. India is also negotiating FTAs with several other geographies to hedge its overall risks, even as all options remain open with respect to signing of a trade deal, of a bilateral trade agreement. Now, this is an interim deal being negotiated at this point of time, and following which the first tranche of a BTA would be discussed, and for that, of course, both the sides are looking to sign the first tranche by September or October of this year, which would be followed by a complete trade deal. So the interim deal will involve several tariff lines, thousands of tariff lines, followed by the first tranche of the deal, which will also involve several other goods and also possibly some bit of services, which would be followed by a full-fledged deal. So an interim deal right now is being discussed, and it remains to be seen how early it is going to be concluded, and more importantly, which all tariff lines are going to remain a part of it.
Got it. All right, Abhimanyu, thank you very much for that quick update on that important development. So we'll keep watching out for more on this. But before we hit market opening, let's quickly look at Brigade Enterprises. The company is looking at raising some funds for one of their arms. Sonal has more details. Sonal.
Oh, well, it is a valuation setting exercise that Brigade Enterprises is doing for its hotels arm, which is Brigade Hotels Ventures Limited, which is the wholly owned subsidiary of the company. They've gone ahead and issued shares to some of the investors, which includes 361 Alternative Asset Management. 1.4 crore shares have been issued at 90 rupees per share. Now, this gives 361 around 4.74% stake in the hotels division, and it values the hotels business at around 2,658 crore rupees. Now, do remember, Brigade Hotels has filed for a 900 crore rupee IPO. They have 1,600 keys, 8 hotels, average room rate at 6,260 rupees per room. So this is just the start of that valuation setting exercise which Brigade is undertaking.
Okay, all right, got it. Thank you very much for that, Sonal. We are counting down to the open, and the start is going to be almost 50 points higher. So we're right in the center of that range, and this is where we spent the last 4 trading sessions now. Between 25,500, 550 to going up to about 25,600. So let's see how it plays out. Yesterday, the Bank Nifty played spoiled sport. Let's see if it can be any different this time around. So just waiting for the countdown and the opening bell to go off. And here we go. All right, so we have a 42-point gain, 50, now 60-point gain on the index. And leading it from the front would be some names like Power Grid, Tata Motors, Shriram Finance, Wipro, Infosys. So these are the early movers. On the downside, some of the banks are still dragging. Some of the financials are still dragging, which was the issue with the market yesterday. So names like HDFC Life, SBI Life, lower this morning. Kotak, down over 1%. IndusInd Bank is still down. Yesterday, it was reacting to a downgrade coming in from a brokerage note. So these are stocks which are still on the lower side. Nifty is just about trying to digest that gain of 40 to 50 odd points. Let's see. Bank Nifty is absolutely flat, but mid-caps off to a better start this morning.
Okay, let's quickly run through the large cap action then. In the Nifty, the top gainer today is Power Grid. Asian Paints too is shrugging off news about that CCI probe. Yesterday also it recovered nearly 3% from the day's low to close higher by 1%. It's added on another 1%. Eternal is up. Moving with strength are a couple of these commodity names, metal names, Tata Steel, Hindalco on the buyers list. IT heavyweights like Infosys, Wipro seeing buying. The gains are up about 0.5 to 1%, but in the green now for even a Power Grid, Shriram Finance, L&T. These are some of the stocks holding up in the green. On the way down, you've got Kotak Mahindra Bank hit, IndusInd Bank, where there is a Macquarie double downgrade. So after Goldman's downgrade yesterday, there is another negative brokerage news, and the stock is open with a cut of about 0.5%. Bajaj Finance has lost 3% of its market cap this week. Reliance Industries is retracing. In the morning, there was news about, in one of the pink papers, about how the company is looking to consolidate all the FMCG business into one entity so it can get the investor interest and the management interest focused and targeted. Reliance Industries, a little bit of a profit booking. But other than that, it's mildly positive now for the benchmark indices. Outside of that, it's Nykaa Avenue Supermarts, Nigel, which are under pressure.
Well, that's right. Nykaa, that large trade has taken place, which is up for you in the screen. 6 crore shares getting, changing hands out there. So that's out of the way. Let's see what the stock does. 204 or thereabouts. Let's see if there's a recovery inside. Avenue Supermarts, that's taking on the chin. But the other smaller players, V2 Retail, that's up 3%. Bazaar Style Retail, that as well is up close to around 2%. So contrasting reactions is what you're seeing on that one. V2 Retail still up close to around 3.5% in trade. Vedanta, actually, it's a good day for them to come up with that NCLT deferment to August, because global QEs are fairly okay. The street is a little bit optimistic on metals. So the stock is down only around 0.5% or thereabouts. There is value. However, that demerger timeline could get stretched a little bit. For the time being, stock down only around 0.5%. PB Fintech, there's that upgrade that's come about. So that stock's up close to around 2%. Mahindra Financial with that as well is reacting favorably. Bharat Dynamics, that's the one actually that's pulling back today. That's down close to around 2%. Remember, some of these defense names have seen a big run. But, now, in fact, that one has come in for some mild profit taking as we speak. But the market's up 60 points. Let's see whether or not we have enough to go to around 25,600 or thereabouts. Today, remember, US markets will be shut early, and tomorrow they are on holiday. So the bulls will be going according to their own steam.
One thing that's quite evident in the market action is the propensity to start moving towards consumer stocks. And we keep seeing instances of that day in and day out. Look at the stocks on the move today as well. Rima, of course, highlighted Asian Paints. There's accumulation that started. Now, whether this continues and becomes a lasting trend or not, we'll have to see. There's Eternal, which is doing pretty well. And there are names like Tata Consumer as well on the upside. So interesting move coming in, 63 points higher on the Nifty.
On Asian Paints, Abneesh had earlier written, we had spoken to him, but he had written it will be difficult to prove the CCI probe into Asian Paints abusing its dominant position. Many times, disgruntled distributors initially complained, but eventually they retract. This is very similar to the JSW complaint about 6 years back, but eventually CCI dismissed the complaint, saying that there was no conclusive evidence.
Yeah.
So
maybe not as damaging.
Not as damaging, and perhaps the CCI could dismiss it. At least that was Abneesh's, one way of thinking about it, which is reflecting in the way the stock moved yesterday also.
Absolutely.
And even today now, 1.5%.
It's also a lot about where you are in the market at what point in time. Now, if Asian Paints was coming off, after a strong 1 year, 2 year rally, then maybe the market reaction on the news of a CCI probe would have been very, very different. But we're in a very different space when it comes to the paints sector. But let's discuss this and more with our next guest. Vineet Samre, Head of Equities at DSP Mutual Fund, is joining in. Vineet, great to have you on. Thanks so much for being with us. We were just discussing amongst ourselves, because we look at so many views coming in from the sell side, and it's almost like a perfectly balanced market between the bull camp and the bear camp. CLSA, and we were just highlighting this. We spoke to, Vikash Jain of CLSA, just earlier. And they're obviously very cautious. They're going with the narrative that earnings are not really picking up and the market's expensive. On the other hand, we just spoke to UBS, Hartmut Issel, their Asia equity strategist, and he says, hey, earnings will pick up. You've got a low base. You'll have double-digit earnings. There's a fiscal boost coming in as well in the form of the income tax cut. So why wouldn't I buy India? He's more optimistic and constructive of the market. Which of these views is more palatable to you?
So clearly, as long-term investors, I think the second view is more palatable. But let me say that I think at the moment, both the views are somewhere, I would say, balanced. And I think it is a time frame with which each of them are sort of looking at the situation at the moment. And clearly, as we have recovered from the market lows, which we had seen in the month of March to now, valuations have seen, it seems to be a bit punchy across the board, not just few sectors, but across the board. And on top of it, we are entering the first quarter with a slightly moderate kind of an expectation. Demand momentum has still not maybe caught up, to the expectations. And we believe that all the factors, the macro factors which are required, like you mentioned about the taxation, interest rates, and all of those, I think definitely those will have a positive effect on the growth, on the economy. But maybe it takes 2 quarters or 3 quarters down the line, maybe through the festival season, we start seeing some improvement. But I think from my perspective, I would say that the macro factors are now more conducive for growth versus last year. And all of these factors should eventually mean that, and with the low base of last year, maybe this quarter, next quarter, we still have a slightly lower growth. So from that perspective, I would say that the growth outlook should start improving maybe towards the second half, and that's where one should start looking at some directions for the market.
So how has this, Vineet Morning, influenced your portfolio decision making, say, in the last 1 month? Can you tell us what you all have been doing at DSP Mutual Fund?
Yeah, so see, broadly, I think the portfolios really doesn't change as much really from the very short-term perspective. But broadly, what we are trying to align our portfolio towards are these macro factors which are going to mean that the balance of trade could shift to consumers as a category towards the maybe end of this year. The banking and the lending space could start again becoming good because we have actually reached a stage where the credit growth is lower than the nominal growth of the economy. So that's something which is alarming, and that could sort of start becoming better as we go forward. And incrementally, I think there are some sectors where we believe they have been in the low cycle over the last 2 to 3 years, including the rural side of the economy, the agri input as a category, the specialty chemicals. All of those are something where we are seeing some bit of recovery trends coming about, while it still remains very volatile globally. But we believe that after having seen a consolidation over the last 2 to 3 years, these segments could also maybe provide a decent opportunity again from the next 2 to 3 years perspective.
Hi, Vineet. Good morning. Good to see you, Vin. What about allocation? There was a time, I think around 4 to 5 months ago, where those small and mid caps that gone through the roof. Then they went through a cooling off period, actually, which would have been a great time to enter. And if I remember correctly, somewhere in the month of March, you were saying that maybe it's a good time actually to allocate to some small caps at this point of time, small and mid caps. Post the recent run-up, some stocks have bounced up 30-40% as well. What would your capital allocation strategy be?
No, so I would, Nigel, I'm very biased towards the small and mid cap. Having seen the segment for long now, I believe that generally there are broader opportunities which one is able to play through these categories, and one has to really take a long-term view because we have seen many companies. In fact, let me give an example that 5 years back there was no EMS as a category in India, and look at the market capitalization of the largest company out there. So I would say opportunities are also sort of coming up. One needs to keep a much more diversified view and also a long-term view around these categories. And hence, I would say that having a decent size allocation, if one is thinking of next 7-10 years, towards a small and mid cap is not an issue at all. Short-term movements are very difficult to capture and forecast, and hence I think one should clearly take a longer term view around these.
Vineet, let me quiz you a little more on the consumer call, because that's also becoming, I mean, not a really consensus call in the market, but increasingly people are veering around to the view that at some point consumer stocks have to perk up. Which segment are you relatively more optimistic on? I mean, while discretionary consumption anyways, when we were discussing this actually on the editor's playbook yesterday, and that show will play out soon enough on, on CNBC Access. But discretionary consumption in stocks like Indian hotels, etc., they've already gone through the roof. But more mass consumption, do you expect that pick up? And how would you play it? Retail, apparel, FMCG, I don't know, coolers, ACs, how would you play it?
No, so I think you're right. And very frankly, it is a bit confusing because very difficult currently to understand the demand trends. While we broadly know that consumption as a category should do well given what's happening. But like you said, I think it is going to be a bit tentative because as we look at, different categories, the quarterly numbers or the commentaries are not, very clear in terms of how the trends are going to sort of sustain going forward. So maybe it would be a good way to create a basket of categories, a basket of companies within subcategories, maybe a white good as a category, apparels, innerwear, QSR. Some of these, and take a broader call that if we broadly are with companies which are sort of leading companies within those spaces and likely to be beneficiary of the macro trends, I think we need to take them as a basket approach, and which is what we have also done as a part of our portfolios. And especially if you look at a small cap fund, I think we have even more broader segments to sort of look at. And from the other perspective, I think we are also thinking that the mass consumption, which you mentioned, I think the low income category definitely, which was hurt a couple of years back. Now, I think we are seeing them also maybe going to participate in this consumption trend. So that's one area. The other, other which is from the macro front, we have a bit of a contra trend, which is the auto ancillary today, where we are seeing the growth for the OEs bit low. But I am generally positive on the auto ancillary front because I think these companies have created very strong franchisee and they are able to capture the global markets and capture even wider areas beyond auto, let's say aerospace, defense, and all of those. So I would imagine that it is also going to be good to have allocation towards those categories because the companies have created very strong, franchisees for the products which they are into.
Okay, so advisable to take more of a basket approach, basically, because you don't know where the wallet will open and where the money will be spent, whether it's shoes or apparel, like you said. So maybe better to take an overall approach to these things. What else, Vineet? I mean, where else are you optimistic looking at the second half of this year? You mentioned financial services. Again, that's a very wide universe. So there, as we go through this rate cut cycle, I mean, where are you more optimistic? Banks, non-banks, maybe some of the side plays like maybe insurance, capital markets, etc. What do you like here?
So I would say that in the order of, let's say, preference, I would first go for the non-banking financial companies because there the benefit of cost of funds will flow through maybe 2 quarters down the line, and they will see much better growth prospects. Again, the low base should sort of help these segments. Beyond that, I would also say that the life insurance companies, while they have moved up and the valuations particularly are not very attractive, but still, I would imagine that the sector is coming out of a very strong regulatory headwind over the course of last 1.5 year, and maybe and despite those headwinds, I think the sector has performed quite decent in terms of their overall performance. So having a positive view around those as well. And capital markets, actually, it's very cyclical. Maybe next 1 or 2 quarters, if we have more market volatility and some of these names become slightly more palatable in terms of valuations, we are open to look at those as well.
Vineet, thank you very much for joining us this morning. Moving on now to the consumer durable space. Now, channel checks suggest that weak sales and demand for room air conditioners amid the early monsoon and weak summer has hurt sentiment, especially compared to last year. So we have with us B. Tyagarajan, Managing Director at Blue Star, with us on the show. Thank you very much, sir, for joining in. Would it be fair to say that Q1, the room air conditioning market, RAC, could see a drop of 20-25% given the monsoons that we've seen, the fact that summer demand, consumer sentiment has been weak? Is a 20-25% decline for the industry or for your company a realistic assumption?
Good morning, Rima. Wonderful to talk to you this morning. This has been in the news for quite some time. From April onwards, there has been monsoon and the temperatures did not go up at all. It's a weak summer. So prior to the end of the quarter itself, the industry has declared the degrowth over last year would be around 25%. Remember, last year was a bumper summer. It was more than 57% growth. Now that has been in the news, so nothing is going to change now. It's a quarter which was bad for room air conditioners, may not be that bad for commercial refrigeration products. Having said that, to take a CAGR, still it is holding up at 15% CAGR, and even after this weak summer. So if you are part of this industry, one will have to cope with these unfortunate seasons. That's perfectly fine.
So you're saying a 35% drop for the industry in Q1 for room air conditioners? Did I get that right?
My estimate is the industry should have grown by around 25%. Blue Star
25,
also, I have been stating this for the past 2-3 months that it is so. And I have also stated one more thing. Whenever the summer season is weak, the festival season and the subsequent Q4 always have done well. And, I have plotted all the weak summers in the past. Eventually, some 10 to 15% growth is really possible. It should happen.
Okay, so 25% lower for Q1, but for the full year, 10 to 15% should stay intact.
Yeah, I am maintaining that this has been...
You're maintaining your full year guidance. Got that.
Yeah.
Okay. Sir, so, the other issue was this whole compressor issue. That was something that was hurting the industry till a couple of months back. That has resolved itself completely now?
I would say provisionally, because there was an extension that was given. This is a non-tariff barrier. So let us get the big picture right. There is a PLI, component ecosystem is coming up, and for compressors, the facilities are coming up. And I think by 2028, India should be self-reliant on compressors. In the meanwhile, the extensions are being given. It's sometimes 6 months, sometime 1 year. So at least at this point of time, there is respite till around June 2026, and industry will have to work together to ensure that we become self-reliant. I think by 2028 it should happen.
Hi, sir. Good morning. Good to see you, Ben. You're sounding optimistic about the next few months, though the start to the year has been quite soft. You had pushed through a price increase in line with what the industry as well had done. What is the trend in terms of pricing from here on?
See, whenever the summer season is weak, so one would like to clear out the stock. Stocks are not at abnormal levels, but one will have to clear out the stock. And remember, there is going to be an energy label change that's coming up on 31st December 2025. And so there will be huge sale of old energy label products, and moving into 2026 there will be demand for new energy label products. The consumers will behave both way. Someone would like to buy today's 5-star, somebody would like to buy tomorrow's 5-star. So the festival season is going to be exciting. At this point of time, I don't think there is a huge price drop that is happening. But I can imagine whenever there is a weak summer, you will not have opportunity to improve the margins. I don't think so. So next 3 years, Nigel, we talked about it. It's like the Duckworth-Lewis method. So you don't know really whether to score runs or hold on to the wickets, and that's how it is. We will do so.
It's been actually a good start to the test match. I hope so, that our boys can pull it through. We put up more than 300 runs on day one, and it seems, hopefully we'll have this covered. That said, getting back to business, your market share has been gradually improving, and you've outgrown the industry. Could you give us the targets for the next few years, Mr. Tyagarajan? Where do you see your market share headed?
No, as we have declared that our immediate goal is 15%. We were somewhere near 14%. And that is something which we could not do it last year. I think we will persist with that. The strategy behind that will be to have products at all price points and to differentiate ourselves through exceptional customer experience. The consumer expectations are also changing. They are used to now quick commerce. So they would like the air conditioner to be delivered the same day, installed the same day. The service level expectations are going up. So we continue to invest in these areas so that we are a differentiated player and we have the products at all price points and continue to expand the distribution network. I think we will be able to get to 15% or closer to 15% at least by end of this financial year.
Sir, considering that Q1 has been a bit of a washout, what will this do to your margins? I think you're guided for about 8.5% in terms of EBITDA margins. Will you be able to manage that in Q1? And for the full year, what are the raw material trends that you expect?
Our policy has been clear that if there is a raw material price increase or input cost, we'll pass it on to the consumers. We will roll it back if it is coming down. I do not see a major problem in margin management rest of the quarter. The Q1, of course, was always known that you are planning for 25-30%. When that didn't happen, right from April, May, we have been declaring that this quarter will be a quarter which is disappointing. I won't call it washout. The degrowth is compared with the previous year, which was a bumper year. So if you are to be taking average of the 2 previous years, still it would have been a flat growth. So there is nothing to worry about that. So it is just that your expectations were high based on the IMD forecast. Therefore, one is disappointed. That's about all. So the industry has been playing responsibly, is my view. And let's say, what are we talking about? We are talking about 8 to 8.5% operating margin on a full year basis, whether this category can deliver. I continue to maintain that it will be possible.
Just a quick word on commercial AC, CAC as you call it. What's been the growth in Q1? Because data center demand is really fueling, growth in this category for you. So what is your revenue contribution from commercial ACs? What is it growing at? And give us some projections, say in the next 2 or 3 years, what could that number look like?
I will not be able to talk specifically about Q1 because we are on a silent period that till the results are declared. But commercial refrigeration has the potential to become another room air conditioner category for the simple reason the penetrations are very, very poor. The growth projections are at a CAGR of around 25%. And Blue Star is a leader. We are present in every part of this segment, whether it is deep freezers or bottle coolers or cold chain. And we are not present only in the transport refrigeration part of it. But unfortunately, the market size is very small. It is less than 5,000 crores. And I would expect this to triple by 2030.
Yeah.
And driven by consumption of frozen food. Right now, the growth is driven by also the quick commerce delivery platforms. A lot of cold storages are set up by them. And the pharmaceutical industry is expanding. And most importantly, the traditional retail or what we call as Kirana stores, they are modernizing.
Correct.
It's an exciting part of business for us.
Sure. So commercial refrigeration, that's a segment to watch. Sir, very quickly before we let you go today, could you just tell us, with Q1 being as lackluster as it was, what are your inventory levels now? How do they compare with average inventory levels? And also, roughly speaking, what is the utilization rate at which your plants would be operating?
Much before the end of the quarter, I have disclosed this to you and the financial press. The productions were cut down by 25 to 30%, depending on the SKUs. And because manufacturing is happening locally, I do not think finished goods inventory is an issue at all. One will have to look at the dealer inventory, whether they all, if you recollect in March, they purchased for the rest of the quarter, and they are also diluting it. And I don't think inventory is a major issue. Perhaps, 2 to 3 weeks more inventory maybe in the system, that is perfectly fine. And the good thing that has happened is with the local manufacturing, you do not have this issue. Earlier, prior to 2021, containers of air conditioners would have reached India, and you will struggle for 6 months till the onset of festival season to liquidate. That's not the case anymore in the industry.
And sir, the capacity utilization at present?
Going forward, forget Q1. Going forward, it will be on an annualized basis. We are running tight. We will be close to around 100% because our expansions are happening modular depending on the demand.
Okay. All right. Got that. Good to know, and lots of details over there. Thank you, as always, for joining in and giving us some perspective on how things are shaping up now that Q1 is over. That's Blue Star talking about things picking up in the second half and retaining their guidance of about 15% growth this year. Let's move on then to a CNBC-TV18 exclusive. Karnataka Bank saw a leadership shake-up after its MD and CEO Sri Krishna Harihara Sarma resigned, citing personal reasons. The company's executive director, Sekhar Rao, also resigned, citing personal reasons and the inability to relocate to Mangaluru. In an exclusive conversation with Lata Venkatesh, P. Pradeep Kumar, the chairman of Karnataka Bank, spoke about the interim arrangement and the impact of these leadership changes on the bank's business. Take a look.
Yes, both the MD and ED have resigned. Mr. Raghavendra Bhatt was an ex-CGM of the bank, is a retired CGM of the bank. We have just inducted him as a COO. We have recommended an interim MD to the Reserve Bank of India. Okay. We are awaiting Reserve Bank of India's approval for the new interim MD.
Fair enough.
And we trust that the Reserve Bank's approval for the interim MD will be in place before the 15th July when Mr. Sri Krishnan will be resigning.
Okay. Fair enough. What is the more longer-term plan? Have you all already started a search for a new MD? And is it, some organization, an HR company, or is it an advertisement? What is the procedure?
We have already constituted a search committee on the same day when the resignation was accepted in the board. They are in the process of appointing an HR firm. Okay. And maybe in the next 1 week, we'll appoint the HR firm and then go forward with the selection of the new incumbents.
Okay. By when do you think the entire process will be completed?
I mean, it's very difficult to estimate. Maybe 2 months for month and two for selection, another couple of months from RBI for approval, maybe 3 to 4 months.
Okay, okay. Did Mr. Raghavendra Bhatt retire recently?
No,
is he familiar with the bank? Is it just like a very
He retired in 2019. He's very familiar because he was with 38 years with the bank.
Okay.
He knows the bank inside out, including the people.
Okay.
That's a great advantage. That is why we thought he's the right choice to bring in as a chief operating officer so that the operations don't suffer.
Okay. Is there any preference in terms of the terms of reference you give the search committee? Will it be internal candidates who will be preferred or any such term of reference?
I think we look at the entire universe, internal and external, and choose the right candidate for the bank.
Okay. Is there anything at all that Reserve Bank has communicated to you in the last few days? You did say that you are awaiting Raghavendra Bhatt's, appointment as the interim MD.
No, I am not told that Mr. Raghavendra Bhatt is being appointed as interim MD. Mr. Raghavendra Bhatt has joined today, the 2nd July, as the COO.
As COO.
We have recommended to the Reserve Bank of India person for an interim MD.
Yes.
We are awaiting Reserve Bank of India's approval. I think we will be able to get it from Reserve Bank by the 15th July.
Okay, so the COO is not the person being recommended as interim MD?
I can't say anything at that time who is the new interim MD.
Okay.
I mean, these are all, unless the regulator approves and I tell the stock exchange, I can't tell anybody else.
All right, fair enough. Any other intimation at all from the Reserve Bank? Or any other conversation you may have had?
No, see, conversations will happen with the regulator continuously. So we've had conversations.
Okay. Well, we were given to understand that under the previous MD, there was a process of digitalization and retailization. This is what we heard from people close to the bank. Are those processes likely to continue? Do you expect any disruptions?
Whatever changes have been initiated will continue. All the changes are for the better growth of the bank. I don't think there will be any disruption.
Okay, okay. And did you notice any withdrawal of deposits, any problem at all in the bank because of the resignations?
Here and there were some small withdrawals, but nothing significant as to affect the bank. The bank's liquidity position is very comfortable.
Okay.
And if you had observed our capital adequacy ratio is at 19.85, I think, which is one of the highest in the industry. So we have enough capital for growth for the 3-4 years, and we have sufficient liquidity. I don't think neither liquidity or capital or growth is going to be affected.
Okay. Well, if you can dwell a little on the past, we heard about some auditor reports on 1.5 crore of expenses which were not authorized or above the authorization for the MD and the ED. But the resignation letter said personal reasons. Is there anything you can add in terms of the reasons for their sudden quitting?
I think these are two different events. Okay. Yes, there were some differences which have been resolved amicably. That's what we have said in the press release also. These resignations, they have said, is due to personal reasons. The MD wants to move back to Mumbai.
Okay.
And in case of ED, there has been some move by RBI to stay more often in Mangalore, which he says finds it difficult because of his personal circumstances.
Fair enough. So, you know, the separate issue which investors in the share market have is that in many old private sector banks, when a new person with new ideas of maybe digitalization or computerization are introduced, there is a dissonance. Have you noticed any such dissonance? And is this something that the bank will have to tide over?
The digitalization process, I think, started somewhere in 2018, much before I joined.
Okay.
BCG were our consultant. So this is not something new. Okay. He was taking forward those initiatives and some more new initiatives. So I think there is no dissonance in the bank. I mean, without digitalization, I don't think the bank can survive or any bank can survive nowadays.
Okay.
We are like any other bank, depending on more and more on technology and digitalization for improving customer service, for retaining customers, and for growth.
Okay. So there is no dissonance between the management and the rank and file of the bank. That's what investors would worry. That's why I'm asking.
I don't think investors have anything to worry. Okay. All initiatives will be continued.
Okay. Any other message for investors? That's largely the viewership that is listening to you.
The investors need not worry. All the initiatives will continue. And the plans for growth, digitalization, increasing number of products, all this will continue. And I am sure the profitability will substantially improve in the coming months.
Okay.
Months and years.
All right, well, time to slip into a short break. On the other side, we have Pawan Goel of Naukri.com who's waiting for us, and Abhishek Kumar of JM Financial Institutional Securities who's waiting by to tell us about the latest in terms of hiring trends. Don't go anywhere.
Welcome back. You're with us on Bazaar Morning Call, and we're looking at trends from the IT space now. Of course, what companies are saying, what's happening with respect to the business and overall hiring trends. So let's actually talk about this, because hiring activity seems to have picked up pace. This is as per the Naukri JobSpeak Index. This index saw an 11% jump in June. IT hiring has seen a turnaround after months of muted activity. To talk about this and how companies are positioned, we have with us Pawan Goyal, Executive Director and Chief Business Officer at Naukri.com. And we also have Abhishek Kumar, IT Services Research Analyst at JM Financial. Gentlemen, thanks so much for joining in. Let's start with the good news first, Pawan. So it's great to hear that the JobSpeak Index is now pointing towards an 11% improvement. This at a time when, global headlines are still weak, whether it's Google or yesterday it was Microsoft. I mean, the layoff announcements are real. So you tell us, how should we interpret this 11% increase in the JobSpeak Index? What level of jobs are we talking about? Is it large IT services companies, mid-sized? Tell us more.
Yeah, so I think we should, while there is a month-to-month JobSpeak variation, if you take a quarter view, the quarter view is more subdued. The April was at 9%, May was flattish, June was 11%. So for the quarter, it turns out to be about 6%. So it's a reasonably, not a doom and gloom, but not a very, I should say, ebullient scenario as well. Now, when
6% over Q1, you'd say, right? That's the average increase.
Yes, 6% in the full quarter.
And this we're talking about routine, IT services jobs.
No.
Some more color on this. What kind of companies?
Yeah, I'll give more color. Yeah. So this is for overall white collar hiring. Now, if you double click on IT. April was give or take 1 or 2%. May was negative. And June is slightly positive, which is 5%. Now, so that's a turnaround from a flattish or negative to +5, but it is still only 5%. And if you average for the quarter, it still remains flattish. Now, in IT, it includes several other sub-classification. You have services, you have software companies, technology companies, and all of that. So if you go by another next level double click, IT services is still negative. I don't have the specific number there, but in IT software and technology, they are more positive.
So what's the quarterly average for IT services? Like you said, 6% is the average for white collar jobs overall.
For
IT services?
IT overall is flat.
IT overall is flat. Got it.
And how would Pawan, but is there any trend? How would this number of 6% and even flat for the IT services compare with the prior 2 or 3 quarters?
So if you take the full 5-quarter view for IT, so starting from, let's say, Q1 of last year, there was one quarter, which is July, August, September of last year, Q2 fiscal, Q3 calendar, which saw robust 10% plus growth.
Okay.
All the other 4 quarters have been very similar. It's like either 1%, 0%, -1. It's varied in that range, except for that one quarter. So IT overall has remained muted. There are months where it seems like perhaps it will buck the trend, but other than that one quarter, it's not sustained.
So it's the same for the last 3 quarters at least?
Yes.
Correct? 3 or 4 quarters?
Absolutely.
And what about the open positions going into the next quarter? Do we have any numbers indicating a trend, or what would the number stand at?
So JobSpeak is a measure of that. It's both open, whatever as people have searched for, and all of that. So it's an all-encompassing metric. So I don't, how things will change into July, it's hard to predict. But IT long-term view has been flattish.
Okay. Abhishek, you want to come in? Starting next week, we will be asking the companies about their hiring plans for FY26. Last year was a muted year in terms of at least fresher hiring. Now that increasingly we are seeing automation or AI, becoming more mainstream, even in coding, what are your thoughts on IT hiring going ahead?
Yeah, hi. Good morning. Thanks for having me here. I think as far as hiring is concerned, for large cap IT, especially, there are a lot of dynamics that is playing out, not just automation. First is just demand, right? Demand still subdued. The players still trying to improve their pyramid, trying to bring in more efficiency. So we see utilization levels for most of the IT players elevated, and they will probably stay elevated. They don't want to build capacity right now. They are probably just replacing attrition with with freshers, and that's why that's how they are trying to improve their pyramid. But apart from that, they are not positioned for growth, because the visibility still remains low. So I expect on a net basis, hiring for IT services companies to remain subdued. Any hiring that they might do might be for specific skill set or for improving their pyramid by just replacing attrition.
Okay, Abhishek, that doesn't sound too great. I mean, from overall economy perspective either, you're expecting IT hiring to remain muted. Abhishek, maybe it's a little hard to answer this, but what's your sense? How much of this absolute flattish trend on IT hiring, how much of it is just because projects are getting delayed, there's global uncertainty, etc.? I mean, the business deals, and most companies have been telling us that, right? Even business conversations, deal ramp-ups, everything's getting pushed back. How much of this is pure business related? And how much could it be because of the changing nature of jobs? Maybe more AI, more automation. What's your sense?
Yeah, I mean, difficult question to answer. It's a combination of both, but I would say that it is more because of the delays in ramp-ups, deals not getting closed. There are margin pressures, so nobody wants to build capacity. So it's a lot more to do with the demand environment than because of AI. AI obviously has a role to play, but I don't think that is very prominent right now.
All right. Hi, gentlemen. Good morning. Good to see you all in. Well, Abhishek, I wanted to ask you a question with regard to earnings. Will a revision in Infosys's guidance to the lower end of the range that they've already guided for, will it excite the street? What are you penciling in?
Yeah, so our expectation is that they will raise the lower end of the guidance. At the beginning of the year, they said that their lower end of the guidance bakes in deterioration in the demand environment. That has not panned out. So we expect them to raise the lower end of the guidance, and then obviously a couple of acquisitions got concluded. So overall, we expect them to raise the guidance from 0 to 3% to 1.5 to 3.5%. That includes 50 basis points of inorganic contribution.
Okay, but will it be a positive trigger, Pawan? Or do you think it's in the price and it's only the lower end which gets upgraded?
So,
sorry, I meant the question is for Abhishek. Apologies.
Yeah, I think that should be taken as positive because, we saw it last year also. Infosys through the year raised its guidance. So that should be taken as positive by the street.
You've also downgraded Tech Mahindra to a hold. Can you take us through the rationale behind that?
Yeah, so Tech Mahindra, since 31st of April, has been the best performing large cap IT services stock, up 18%, significantly outperforming both its larger peers and Nifty IT. And now, its multiples forward, PE multiples are at a slight premium to Infosys. So we think that kind of caps the upside, and we are expecting a soft quarter for Tech Mahindra. So I think the stock can consolidate, and investors should wait for a better entry point to play the turnaround story. We still remain constructive on the on the turnaround path that they are on, but I think at this valuation, there could be some consolidation in the stock.
Okay, all right, got that. Abhishek, we want to actually, talk to you more about a lot of your picks, etc. Maybe we'll have a longer discussion. But right now, to wrap this up and go back to the hiring point, Pawan, while you're telling us about muted trends across IT, what is the indication? What are you hearing from companies? Why is demand low? And what are you anticipating on this whole AI piece, AI automation? Also, I don't know if there's any indication of salaries. Yeah. Wherever there is hiring, because the market is so muted, is there wage deflation, so to speak, as well? Or could that be possible in the coming months?
So from a demand standpoint, it's all that we are hearing is uncertainty. Now, there are several geopolitical events which have contributed to it. And so the uncertainty in terms of where the business is what we are hearing. Now, in terms of AI, we see a significant demand for AI jobs. It's up in the 40% kind of a range, and it has sustained in that range for a long period. So AI demand is very, very robust. That's also leading to premiumization of talent. If you look at talent which is paid highly with respect relative to their experience, across experience segment, we see demand for that talent. Okay, so it's a demand for, let's say, this 20 lakh plus segment is in north of 20%. So by salary, it's the premium talent, more experienced talent that is in demand. Less premium talent, that's where we see demand being much softer. In IT, there's another trend we also see. The demand is higher in tier 2, tier 3 cities. So perhaps that's an indication of talent availability at the right price point. So that's also what we are seeing. Now, with respect to AI and its overall impact, it continues to remain a question on everybody's mind. But one indicator that I look at is growth in ITES and BPO segment. And for the quarter, that segment has grown by 9%. Okay, and June is an aberration and it's much, much higher at 19. But for the quarter, nevertheless, still is 9%. So that is where one would expect an impact. But while it may happen in future, it is yet to materialize in our numbers.
Gentlemen, thank you very much for joining in. You know, last month I'd read some article which said that in the US, like graduates, so in the age of 22 to 27, so the degree holders, they're not getting jobs, and the unemployment faced by that category is the worst in a decade, barring the COVID period. And so, you know, so many of the computer science graduates who perhaps 2 years back would have, 3 years back, would have had 10 job offers, this time are struggling. And that's, what's happening on the AI front.
And that's also telling us that I think the IT landscape is now starting what could be a tectonic change phase from, low-level, entry-level jobs and mass hiring. What we were just hearing Pawan say, that the demand now is for experienced talent, for high-quality talent, people who've upskilled themselves. So the Indian IT landscape seems to be definitely going through a major, major change. Gentlemen, thank you very much for that. Great conversation. Thank you for all the perspective. But with that, we have to shift the focus back to the market. Let's look at the Nifty again. Nifty is doing very well, actually, 88, 89 points higher. So the morning has turned out to be fairly robust. The mid-cap index and the bank Nifty, those indices are also up a little over 0.25%. So there was that early dip, it's gotten bought, and the mood seems to be up for now. Good time to bring in Mitesh to get some more ideas. Mitesh, welcome back. So tell us, how do you size up the market now? What are the trades, index and stocks?
So the market, today we talked about that 25,400 has ample support, and therefore, good chance that we will see a bounce back. I think we already started that process. We will head towards maybe 25,650, 700 zones, which is where some kind of, a supply could emerge, and that's the short-term target. I'm still not sure whether we'll immediately clear 25,750. So for the timing, we'll keep 25,700 as the target area and suggest traders to take some profits over there. And then see, if it shows further strength, then we'll maybe add at higher levels.
Okay, all right. What about individual stocks, Mitesh?
I have one buy and one sell, Nigel. On the buying side is Axis Bank. I think, it's been doing a range of about 1165 to about 1250 on the upside. And it's bouncing back from the lows of that lower end of the range. So today, I think we got a low of around 1169. So buy here with a stop below 1160. Look for targets to begin with in the range of 1220, and then eventually 1240, 45 on the upside. On the selling side is Bajaj Finserv. I think, that's a stock which, after having a good rally, is now showing mild signs of profit booking. So sell here with a stop just about levels of 2006. And look for targets of 1940.
Okay, all right. Thanks a lot, Mitesh, for that. And the stock we discussed in the morning, CPCL, which is Chennai Petro. We had highlighted that yesterday delivery was very, very large in comparison to averages. The first hour volumes, in fact, are very, very large in comparison to what we have seen. Massive volumes. And the stock, in fact, has perked up a little bit as well. The 20-day MA comes in at around 660 rupees or thereabouts. Well, time to slip into a short break. On the other side, Manisha Gupta is waiting for us. She'll turn the attention to the commodity space.
Welcome back. Equity markets having a good morning. Let's move on to the world of commodities then. And we have Manisha Gupta in the house for all the latest action. Manisha, so what's on your radar today?
Well, I'm looking at metals because yesterday was a good day, and today as well, we're looking at the Asian markets trading on the positive side here. So if you look at the overnight gains and movements, you will see that it's more than 2% of gains that we've seen in iron ore, in steel rebar, and even better gains, as you can see, in platinum, palladium, between 4 to 5%. It's been a good overnight session, and the Asian markets actually seem to be doing a bit of a buying at those current levels. But I also want to talk about copper because we're trading at a new 3-month highs. $5.1 is how it's trading in the COMEX markets there. And of course, there's a bit of a disparity because when you look at LME, the first half of this year has seen gains of 12%. But it is the US markets which are trading at a premium because of these concerns about or whether or not there are potential tariffs coming in. And is the reason you've seen the prices gain up by 26%. The dollar index trading at a 3.5-year lows has been supportive. The Chinese manufacturing data has come in on the positive side, better than what the street was anticipating. And there are more trade deals happening now. One between US and Vietnam as well does do well for the sentiment there. And it's the Goldman Sachs says that the Chinese 2025 copper demand is expected to rise by 6%, also supportive. So the markets are anticipating that going forward, while the supply could be a concern and so could be tariffs, but it is going to be a stronger demand period. Also, when you look at the US copper at spot premium, that one is trading at a $1,200 a ton. So there is more demand right now than later. You have copper prices trading in a backwardation, and that tells you that there is supply tightness, also supportive. Roadblocks also by informal miners in Peru. That report came in overnight, has disrupted transportation. And then the street also is looking at disruption at Panama mine, Congo as well. So just not that it's tight supplies, but there are supply disruptions coming in as well, which are supportive for copper going forward. A quick word on aluminum, and because of the Trump tariffs at around 50%, the US consumers are paying $1,250 a ton above the LME prices right now, keeping the prices also supportive. Same case for zinc as well, with the kind of steel demand and steel positivity that we are seeing. The zinc prices, the galvanized metal, also has seen some support. Having said that, the International Lead and Zinc Study Group says that the world zinc mine is expected to see higher supplies in this year, could keep the prices in check. But it's all going to be about the US jobs data today. Further cues to come in from that.
Thank you very much for that. Let's talk about some of the big movers in the morning. On the way down, it's Avenue Supermarts. Manglam joins in. Manglam?
Well, brokerages aren't very happy with the 16% growth that the company's reported in the revenue. If you look at, the notes that have come in this morning, Morgan Stanley has an underweight rating on the stock target of 3260. They say that, they were expecting a number of 17.4%. So to that extent, it's been slightly below their expectations. The implied same-store sales growth is close to around 3 to 4%. Macquarie too has an underperformed rating and a target of 3,000 rupees on the stock. They say that sales growth moderated slightly from the fourth quarter, and there was a marginal miss, and healthy pace of store additions is what keeps them slightly upbeat on the stock. Goldman Sachs, on the other hand, they have a sell rating. They too have a target price of 3,400. They said the sales growth was weak, but they also expect margin contraction by the company in the first quarter when the company actually goes ahead and reports their results. They believe that the company will continue to face competitive pressure from large, quick commerce players in the urban market. So that keeps them slightly cautious on the stock.
Okay, all right. Got it. Explains why there's no enthusiasm really there on Avenue Supermarts there after the Q1 update. Thanks for that, Manglam. Let's move on to Tata Power. Tata Power is dealing with a bit of a legal blow, arbitration that's not gone in the company's favor in Singapore. Vivek is here with more details. Vivek, fill us in.
Well, that's right. Like we highlighted earlier today, what's actually happened is that Singapore Court Tribunal has actually ruled against the company in a dispute with its Russian mining partner. Now, the company has been asked to pay a significant amount, almost $490 million in damages to its Russian mining partner, which is Kleros Capital Partners. The payment has to be made along with interest as well as other legal costs too need to be covered. Now, the company says that they are in process of reviewing the contents of the award and they are evaluating all options, including the right to challenge this particular award that has gone against them. Now, what is this particular case pertaining to? Kleros earlier claimed that Tata Power breached confidentiality as well as non-circumvention clauses in the NDAs that both the company has earlier entered into. This is for a coal mining project in Russia. Given the fact there's a significant number, almost over 4,000 crore rupees, is the damages that Tata Power will have to bear, there has been a negative reaction on the stock.
Thank you very much for that. Get into a break. On the other side, we'll have Ajay Sahai of Federation of Indian Export Organization and international trade expert Abhijit Das joining in to talk about the US tariff deal with India and with Vietnam and the likely impact on Indian exports.
Welcome back. We're getting back to the big global story, and that is trade deals that the US is signing and perhaps all set to sign. Now, we know that one has been announced between the US and Vietnam overnight. Of course, we are keenly awaiting developments on the India-US trade agreement. Donald Trump yesterday announced that Vietnam trade deal. Maybe it gives us some clues into what the alignment with India could look like. Though, of course, it's very specific bilateral agreements that the US is going in for. Indian exporters perhaps could be looking at higher tariffs. We still have sticky issues around areas like dairy and agriculture. Let's talk about this and the implications for Indian exporters. We have Ajay Sahai, FIO Director General and CEO at the Federation of Indian Export Organization. We also have with us Abhijit Das, international trade expert and former head of the Center for WTO Studies. Gentlemen, thank you very much for joining in. Abhijit, if I could open the floor with you first, and let's start with what we can infer or take away from the way the US-Vietnam trade deal got done. I mean, they started with 90% tariffs, they've ended at 20%, and they've tried to plug the leakage areas, which is this, the tariff to plug any kind of transshipment, which is happening via Vietnam as well. Let's look at the implications for India here. Now that Vietnam doesn't seem to be getting a very raw deal, would you say it's bad news for, say, Indian textile exporters?
First and foremost, it's not entirely correct to say that Vietnam is not getting a raw deal.
let's bear in mind that before the Trump reciprocal tariffs were announced, Vietnam was benefiting from a significant access into the US market at preferential tariffs. So even if the deal which was announced last night, even if it's implemented, it would still be a setback for Vietnam. So let's bear that in mind. Coming to the aspect of what can our exporters expect, the key point over here is that when the reciprocal tariffs were announced in February earlier this year, there was some optimism that Indian exporters would face 26%, Vietnam would face 46%. And there was some optimism that our exporters might increase their share in the US market. Now, that was subject to many caveats and constraints. And I, for one, never really believed that really because of higher tariffs on Vietnam, we would have a huge export opportunity opening up in US. Now, what the recent announcement of the deal between US and Vietnam has done is it has certainly dampened that optimism. Having said that, this should not be a trigger for making sure that India and US come to an agreement immediately before 13th July. To my mind, the real determining factor will be agriculture, and we will have to see how positions on agriculture are accommodated. And that, to my mind, will determine whether we have a deal or not. And if we do end up having a deal, maybe our exporters, even in textiles and clothing sector, might be able to enjoy some benefits compared to Vietnam.
Ajay, any lessons India can draw from the US-Vietnam deal? And secondly, as my colleague Surbhi was also asking, particularly on exports, where India directly competes with Vietnam, what could be the impact on India as things stand right now?
In fact, I consider it a very positive development. The very fact that US has carved out a deal with Vietnam after doing one with UK shows their willingness to engage with other countries. And since India is proactively engaged with the US, we can look forward for a deal. Secondly, we are now very clear that Vietnam will have market access in the US at a minimum tariff of 20%. If we work out a BTA where we get zero tariff, we will have 20% advantage. Even if the reference tariff of 10% remains, we will have 10% advantage. So this will be very, very positive for India. Now, if we look into the products, in fact, India's export to US in the calendar year 2024 was around 80 billion. Vietnam was in 110 billion, and we are competing in many of the sectors, including electrical and electronics, machinery, apparel, in particular, furniture, footwear, saddlery goods, rubber goods, plastic goods, automobile and auto component. And therefore, in these segments, if we enjoy a tariff advantage of 10%, which happens if we work out a BTA, and even if the 10% tariffs remain, it will be a huge gain to India. So definitely we can look forward for that gain. I'm pretty sure that a lot of US companies who are looking into India for export, a lot of them are relocating from Vietnam and China also. They will definitely move towards India. Let us bear in mind that one of the reciprocal tariff fallout has been that global companies are looking into setting manufacturing base in a lot of countries. They are already in China and Vietnam, and therefore they look forward for investment in India in a big way.
No, but we have to see, Mr. Sai, I take your point completely, but those are the things that we'll have to see. This separate transshipment tariff, whether something like this gets worked into the contours with India as well, because we know, Mr. Trump has been very vocal. For instance, he's called out the Apple CEO saying that you are making your phones in China. Now I hear you want to make them in India and then bring them to the US. Doesn't fly. And then separately, we've seen the reports just over the last 24 hours, right? Foxconn sending a lot of its engineers back, etc. So we need to see how this...
He has not clarified on transshipment. The general impression of transshipment is that if the goods of third country get routed through a country which is having preferential tariff, you try to circumvent those provisions. So in fact, this also infers that US is not looking into duty beyond 40% on China and ASEAN, because if China and ASEAN goods are allowed transshipment to Vietnam, not subject to 40%.
40%, which should be the duties in line for China that they're speaking of. I take your point. Just a clarification, Mr. Sai, like you mentioned, that, even if the duty on a lot of items that we're exporting to the US comes at 10%, and you named a lot of items, textiles, electronics, maybe even furniture goods, etc., there will be a differential. What would be the average blended tariff on some of these items now for us, for our exporters, as they were being exported before Liberation Day? Just to understand what the increase will be, assuming we remain at 10%.
On the most of the items, the tariff in the US was in the range of 2 to 5%. Thereafter, now we have moved to 10% reference tariff. I'm not sure when we are negotiating the VTA whether MFN will come to zero. Reference tariff or 10% will remain because US has collected over $300 billion of duty in a single month, and probably in that way they may not provide exemption to reference tariff. Even they have not provided to UK. So I'm basing my assumption that if MFN becomes zero, reference tariff remains at 10%. Vietnam will be having 20% duty, we will having 10% duty. If reference goes, Vietnam will be at 20% duty, we may get zero duty.
That would be sunny skies.
All right. Mr. Das, wanted to get your thoughts in on this rules of origin restriction, the punitive tariff of 40% on transshipped good. If that is a part, is a part of the India-US deal, how will it impact India and Indian exporters?
There are two ways of looking at this 40% punitive tariffs on transshipment. One, of course, is it will prevent countries from circumventing the tariffs which they might themselves face. And over here, China is an obvious target. Other ASEAN countries could be equally on the radar screen. But there's the other way of looking at it. While we are awaiting the fine print, the legal details of how this 40% tariffs will be calculated, what will be the rules of origin, if it's purely based on transshipment, I don't think we have anything to fear. However, if the rules for the transshipment suggest that if you're importing parts and components or inputs from China, and if that is treated as transshipment, then I'm afraid our exports in the sectors of electronics and pharmaceuticals, they may be at the crosshairs of this 40% tariff.
Yeah, that's a great fine point that you've raised, Abhijit, that we need to see that even if the components or the APIs for pharmaceuticals, if they start getting counted as transshipment, then we could be in for a lot of complexity. Very quickly, last 30 seconds, Abhijit, on this. End by telling us about the core sticky point. We know that agriculture and dairy is where things have been stuck. The Americans want to come in. They say we need complete market access, remove non-tariff barriers, allow us to come into your market and compete. What is the workaround, or what would you expect? What kind of a different deal would you expect, which the US president has spoken about?
What we might think of in terms of a landing zone is, while we will not allow GM products to come in, there could be some concession to the US in terms of more predictability in terms of time frames within which we will take a decision on whether to allow GM products to come in or not. On key sticking agriculture products, maybe a possibility would be something called a tariff rate quota, whereby we allow imports of some agriculture products at lower tariffs up to a predefined quantity ceilings. So this could be one option, and maybe this might be perhaps the only viable practical option which protects our domestic interest as well as gives some market access to the US in the agriculture sector.
All right. That's a great perspective to have as we look at the final contours and maybe an eventual announcement of the India-US trade agreement. Thank you very much, gentlemen, for joining in and giving us your views. And with that, it's curtains on this edition of Bazaar. Thanks for watching. Chartbusters coming up next.